morning, it's 8 a.m. and this is the news on Mira Business FM. These are the headlines. Iran's Foreign Minister Abbas Araghchi held high-level talks in Muscat with the Oman's Sultan Haytham bin Tariq. The discussions focused on regional cooperation and safe maritime movement. Talks also highlighted coordination among countries along the Strait of Hormuz. This is seen as key to ensuring secure shipping routes. Araghchi said neighboring countries remain a top priority. He added that safe transit is important for both the region and the global economy. U.S. President Donald Trump says tensions with Iran may be nearing a turning point. He said continued military and economic pressure has weakened Tehran. He added this could open the door to a possible resolution. Trump also pointed to divisions within Iran's leadership. He said this could speed up the outcomes. Meanwhile, Iran has said that they will be arriving in St. Petersburg for talks with Russian President Vladimir Putin. Russian President Vladimir Putin is set to meet with Iranian Foreign Minister Abbas Araghchi in Moscow today, according to Russian media. The talks come as Russia and Iran continue to strengthen ties. Both countries face Western sanctions. Officials say the meeting will focus on ceasefire efforts and the latest regional developments. The talks are expected to consult on both sides about the leaders traveling from Islamabad. Oil prices climbed early today as tensions between the U.S. and Iran happened. Strait of Hormuz remains a key concern with disruptions to shipping continuing. Markets are reacting to fears of tighter supply. Much of the pressure comes from uncertainty around tanker movement in the region. Iran has warned it could restrict traffic through the strait, and the route carries about 1/5 of the world's seaborne oil, making it critical for global energy markets. That's the news for now. Follow more news on our website, mirabusiness.fm.
This is The Morning Drive. It's Mira Business FM. Good morning to you. My name's Tim Elliott. Coming up on the programme in just a few moments' time, we're looking at a new report from Oxford Economics. The headline, tighter financial conditions expose fragilities. The details are next here at Mira Business FM.
Mira Business FM. The sound of success.
It's the morning drive. It's Mira Business FM. Good morning to you. Pressure is building in Gulf markets, and that's as conflict tightens financial conditions, pushing up borrowing costs and shaking investor confidence. From Bahrain's rising debt to stress in Dubai real estate. Now, last Friday saw the release of the latest piece of research from Oxford Economics, and it's a research briefing for the GCC titled Tighter Financial Conditions Expose Fragilities. It's a report that considers the impact essentially of the conflict across the GCC economies, and the author is the head of GCC macroeconomic analysis at Oxford Economics. Azad Zangana is with me in the studio. Good to see you.
Thank you. Good to see you.
Very good to have you here, Azad. So this new briefing came out at the end of last week. Can I start broadly? And I suppose regionally, we have seen market volatility across the Gulf following the conflict. We've seen and are continuing to see supply chain disruption. The blockade remains in place. So the financial conditions are certainly tighter in the GCC. How would you characterize the economic pulse of the region right now?
Well, I mean, this is why we decided to focus on financial markets in this report, because in reality, we've probably had about a handful of real data points so far for the GCC. And because of that, it's really difficult to gauge exactly how serious the situation is. Now, for example, we know that Qatar has just gone into its first trade deficit ever in March because it pretty much didn't export any oil and gas in that month.
Yeah.
So very few data points available so far. But what financial markets are telling us is that there's clearly stress in the system, and there are some areas much more stressed than others, but there's no panic. There is a repricing of risk, but we're certainly not looking at like a Euro-style crisis or anything along those lines.
It certainly feels that way. I mean, if you can gauge an atmosphere or put an atmosphere into context, it doesn't feel like that. How much of the current stress that you talk about, financial stress, is directly linked to the conflict versus maybe any underlying more structural issues?
I think what is important to understand is that it's usually these kind of shocks that expose any structural problems that are there to begin with.
Yeah.
You know, if you were to ask me to run a marathon, you'll know that structurally I'm not built to do that. And so I will really struggle.
I'm in the club with you on that one.
Exactly. So this is the issue. And this is why, you know, international organizations like the IMF exist. They're there to make sure that the structure of economies and public finances and so on are in good stead, so that when these shocks come about, they can withstand them, you know, reasonably well.
We're seeing capital outflows. I think bond spreads are wider. How serious is the cycle that we're seeing at the moment? Because it's a tightening cycle for economies in the region.
I don't think it's too serious for government sectors and government borrowing, largely because, of course, this is a very wealthy part of the world, and if they really wanted to, they wouldn't really need to borrow much money. Bahrain is the exception, of course. They are highly indebted, one of the most indebted countries in the world, actually. But they are backed by good growth, some energy exports as well, which help support the situation, and of course quite a wealthy neighbors as well that will step in and help them, as they have done recently once again. So there's some concerns around that. But I would say more generally that most of the tightening has been felt on the corporate side. So corporate bond spreads, sukuks as well, and of course equity markets have really taken their hit so far.
You've highlighted Bahrain as a specific area of concern in the report. There's a section there dedicated to Bahrain. What is it about the situation in Bahrain that makes it so different from the neighbours around the GCC?
So a genuine need to borrow money. Their debt is at about 130% of GDP now, and they have to manage their finances as best as they can. If suddenly the international markets closed to them, they would be facing some kind of restructuring or default, essentially, very quickly. So it's very important for them to manage the relationship with their investors to make sure that they can continue to roll their debt on. That's the nature of any highly indebted country.
It's so interesting, the management of relationships in all of this and the impact of sentiment and confidence. I want to come back and talk to you a little bit about confidence, actually. That comes up a couple of times in the report. How concerned should markets be about maybe spillover risks from Bahrain then? Is that a concern?
Not for other sovereign markets. Like I said, I think the other GCC nations are just heads and shoulders above Bahrain when it comes to sovereign wealth and indebtedness in general. But the spread and the spillover to corporate markets is quite significant, especially within Bahrain itself. The sovereign market, your government bond, is meant to be your benchmark financing tool for a country. So usually corporate debt is priced over and above that. So if a problem starts within the sovereign, it quickly spills into the corporate, as we've seen, like I said, in the past Eurozone crises that we've had in the past. Now, that's probably not the case totally across Bahrain. I'm sure there are a number of corporates that are actually rated quite a lot higher than the sovereign is. But you can see it coming through in, like I said, in equity markets where you're less protected than you are in the bond market. In the bond market, if a company gets itself into financial difficulties or if it's going under, bonds sit higher in the hierarchy of the capital structure. So essentially, you're compensated first before everybody else, and then the equity guys are usually the losers at the end of the day because they are part owners of the company.
Sure.
Bondholders are creditors, and therefore they're paid first.
And therefore, the markets are far more exposed. Bond markets have recovered some ground since the ceasefire. Is that resilience? Is that the signal, or is it just a temporary relief? How do you gauge it?
It really depends on how the ceasefire goes. I mean, we can clearly see that the reaction has come on the back of the ceasefire and the halting of hostilities for the time being. If it was to restart, we'll have to see how the markets react. If they decide, actually, we'll carry on rallying, S&P 500 hitting new highs, then clearly a lot of the concerns are gone, or they believe that the risk of the current situation going forward is priced in. I'm not convinced that's the case for the region, though. I think if the ceasefire was to break down and hostilities was to escalate, we would get another leg down in a lot of these markets.
Corporate borrowing costs, according to your report, they remain elevated, particularly for Islamic bonds, high-yield sukuk. What does that mean for investment, and what does that mean for growth?
So it should mean that the cost of borrowing essentially has risen for these kind of companies, both the investment grade and the high-yield companies has gone up. Now, as any business out there needs to plan for its capital expenditure, for what it wants to do in the future, if the cost of expansion or even just replenishment, any kind of capital investment really, goes up, then you're going to think twice about whether you want to do it, how much you want to do, whether you want to delay it as well. And of course, this region really has grown quite strongly on the back of capital investment and that kind of activity, construction, for example. Yeah. So those cost increases will have a material impact in terms of whether companies want to invest, and therefore it will hit growth in the future.
Broad and regional, to start with. I wanted to come back to where we are in the UAE, of course. Markets diverging is a point that you make in the report, Abu Dhabi and Dubai. But I wanted to take Dubai specifically. And as you point out, here's the quote. Dubai is far less endowed with oil and gas, mainly relies on travel, tourism, financial services and healthcare as its main sources of growth. That's a given. Plus, your report also suggests, as we are all well aware, that the real estate sector is a major pressure point as well.
It's the biggest part of the index. It's more than half of the Dubai General Financial Index. And so naturally, the outlook for the real estate is going to have a very big impact, an outsized impact on the performance of the market overall. And we can see that real estate stocks as a sector, although predominantly it's one company, I think we all know who that is.
Yeah.
It's down 24% at the moment since the start of the crisis. Now, that's very big, but probably about right when you think about the risks that potentially could play out in the future. So it's dragging down on the index overall. But I mean, apart from the consumer discretionary index and materials as well, everything is down. All the other sectors are down.
Yeah.
So there's a lot of risk that's within the system. You know, financials are down more than 10%. Industrials are down. Utilities are down. Even consumer staples, which in theory should be one of the better areas. Actually, that's down materially as well.
Do you know what's interesting about this? And we were talking off air before we came into the studio, is I think I just kind of said to you, look, the report wasn't as doom and gloom as I'd half expected. And it seemed, correct me if I'm wrong, but it seems as though it is the way you would expect and therefore not as negative as it could be. Almost, in some ways, a more positive outlook. Does that make any sense? I know I'm kind of contradicting myself in the question.
Yeah, I mean, what we're saying in the report is that, you know, the structural issues that we've always known about are showing up because obviously we've had this tightening in markets. And in a sense, what's happening is exactly what we kind of expected to happen. We expected liquidity to tighten. We expected capital withdrawals. And, you know, the central bank, especially of the UAE, has stepped in and provided liquidity. We would expect that to happen. And that's good news, I think, because it shows that policymakers are paying attention to what's going on. And we haven't had an accident or anything along those lines. Whereas in past crises, not just in the region, but around the world, that hasn't always been the case. You know, people have pointed to problems and solutions were not found in time, and markets had to correct very aggressively in order to reflect that risk.
It's very much how the report reads. Back to real estate just quickly, and I wanted to mention this. There are signs of stress in developer debt, rising spreads. Do you think those are early signals of a deeper correction than perhaps was already being pointed to by some observers?
No, I think what's happening within those debt markets in particular just highlight the concerns for those particular developers. I don't think it necessarily reflects on the wider market. Obviously, there are a number of construction companies within the market itself, and you shouldn't treat them all equally. That's always very important. And often, actually, markets get it wrong, and that's exactly what they do. But you shouldn't. You need to look at the fundamentals of each individual company and see how much debt it has, how much leverage there is, what's going on with their pipelines of their projects, and so on, before you begin to sort of understand actually what is the correct sort of default risk that there is. But there was a point in time, especially in March, where there was quite a lot of panic, and suddenly there was a 1 in 3 chance of a number of large construction development companies going bust, according to the debt markets. I think once investors really took a closer look, they realized actually it's nowhere near that high, and they piled back in, and suddenly those costs and spreads came back down again.
There's a great deal that depends on return of foreign demand, though, isn't there? Because of the amount of supply that's coming on stream, I guess.
Yeah, the entire market is really built on foreign demand and expat demand. I think probably you can throw in there as well. So what this war has done is it's led to some very big questions. And I was saying this to you earlier. The biggest question we're getting right now at Oxford Economics is what happens if the expats leave and they don't come back?
Yeah.
What happens if the glitz and glamour that attracts everybody here just doesn't work anymore? And if you don't get that steady stream of migrants coming to the country, then where does that leave the property developers that are, about to deliver tens of thousands of new properties to the market, and where's the demand going to come from? And that's going to be the big challenge for them. What do they do if we even get a slowdown in the number of people coming in? How do they market it to maybe the Emirati community to encourage them to invest in these properties instead of the expats there?
I guess the attraction is to GCC investors as well, but it is limited, isn't it?
It is. There's only so much they can buy at the end of the day. The supply was very much geared to a big growth in migration.
Here in the UAE, the central bank has been very active recently. We're all reading the stories, stepping in with liquidity injections, if you like. What triggered the intervention, and how effective are the measures that the central bank is taking in stabilizing the system?
So at the end of March, they announced quite a big injection of liquidity, which was backed by about 1 trillion dirham worth of assets. And we can see that came in very quickly and helped boost the money supply within the UAE. Essentially, the central bank's job is to speak to the banks on a daily basis to understand, do they have enough liquidity? Is there enough cash in the system? Can they operate and function normally? And the answer came back was, actually, there was quite a lot of liquidity leaving the system. We had about 8% of what we call broad money, the total money supply within the economy, leave within the first 30 days. Now, that's unsustainable. That couldn't continue at that pace for that time. And I think that's what helped prompt that first injection of liquidity, helped lift things back up. But, since then, actually, the liquidity has been falling again. So maybe there's going to be potentially further injections at some point in time. That, and when you look at the spread between what the central bank offers in terms of liquidity and what the banks are lending to each other, that's also risen. Now, in the past, if you think back to the global financial crisis days, that was a classic sign that banks wouldn't trust each other to lend to each other, even on an overnight basis.
Right, got you.
Now, it's nowhere near that severe here.
No.
But it has risen. That is a sign of stress. That is a sign that there's less liquidity available for the banks to lend to each other so that the market can clear every night. And so that liquidity is important from the central bank. And I have no doubt that they're going to do that once again.
Okay, it's a natural effect, though, isn't it? If you're not sure if the money's there, the awareness is heightened. Let's put it that way, I suppose. Money supply contraction, capital withdrawals have raised concerns. Is this a liquidity thing or is it a confidence thing?
No, I think it's more of a liquidity issue. The problem is that a liquidity issue can quickly develop into a confidence problem.
Right.
And that's what you want to cut off very early on. If you see a liquidity issue, quickly go in and fix it as best as you can. And that then gets rid of any risk that a confidence problem escalates into something that becomes unsustainable. We are not in a free-flowing capital economy. We have a peg against the US dollar, and that means that those flows have to be managed. And this is why we're getting stories about potentially the UAE requesting a credit swap line with the United States for dollar liquidity. Because there is a risk, and I'm not expecting this to happen at all, but there is a risk that if markets decide that the dirham needs to depeg against the dollar, it can attack it. We're both from the UK. We both remember what happened there with the exchange rate in the past. So it can happen. And what's important is to get that liquidity in place, get those credit swap lines agreed, even if you never use them. Put it in place so that actually there's no point for investors to try to attack the peg because they'll lose, because that liquidity will be there. So that's why the liquidity is so important.
I wanted to point to confidence a little bit because, the almost ethereal nature of confidence. The GCC has very strong reserves. I think that's a reasonable statement. Investor sentiment, naturally at the moment, is more fragile than it was 50 or 56 days ago. What does it take and this is me asking you to speculate wildly or widely, I suppose, Azad. What does it take to restore confidence?
I don't think confidence has been that badly hit overall.
That's good to hear.
There's been a repricing.
Right.
I think at the end of the day, is the region more risky? Yes. Therefore, should yields be a little bit higher? Probably yes. So I don't think there's an issue around that, at all. I think if we had a confidence problem at this point in time, things would be a lot worse in terms of everyday life and what financial markets would be telling us.
Sure.
So just keep talking to the markets, keep talking to investors, make sure there's plenty of liquidity available when required, and I don't think there'll be a problem with confidence.
How exposed are regional banking systems, given rapid growth in private credit, particularly linked to real estate, do you think?
There's a fair bit of exposure. There has been a very large increase in credit growth, private credit growth in particular, across the region, but the UAE does stand out quite a bit in terms of our risk tools that we monitor. Actually, it scores the highest risk score possible, 10 out of 10 in terms of risk, because of that very big growth in credit provision. Now, we know where a lot of that has gone to. It's gone to the residential real estate market.
Yeah.
It's individuals borrowing either through credit cards or more so in mortgages in order to purchase those properties. So what we're saying in the report is, if there is any concern around the banking system, and I should stress that the overall score for the system is actually reasonably low, but where it is acute is the amount of credit that has been provided in recent years. So if there is a risk around real estate, if there's a very big downturn, then you will start to see an increase in defaults, an increase in the number of late payments on mortgages and so on, which then could create some stress for the banking system. And again, we have to make sure that those banks have enough credit available, which they do, to withstand a shock.
We've got a minute left. I had about 3 or 4 more questions. I'll try and condense the questions. So confidence, not the issue that it could have been, which is good, but the uncertainty that we're in is of concern, I guess, still, because it's very, very hard to plan. But all that said, this feels distinctly unlike 2008 to me, or 2008, 2009. Am I being too positive there? Am I missing something?
No, I think that's about right. In 2008, 2009, we had a genuine big liquidity problem here. And it didn't start here. It started in other parts of the world, but it quickly fed into this region at a time when actually the banking system wasn't very well capitalized, at a time when there was a lot of excess leverage within the system as well. And I do believe that policymakers learned a lot of lessons from that previous crisis and have managed to strengthen the buffers here for future events, as we're probably experiencing right now.
Final point in the report was this, and it's just this one line that I pulled out here. Investors expect GCC partners to pull together in times of stress to support one another, in other words. And I wonder if, again, I'm being naive or lacking foresight, but it seems to me there is a feeling of camaraderie almost, a sense of pulling together in the face of adversity, more than perhaps we've seen in the past. Am I reading this wrong? It feels like the report puts that forward.
These are unprecedented times for the region.
It is that unprecedented times.
Exactly.
Isn't it? Yeah.
And so it's very hard to compare it to the past, but it's good to see that leaders are pulling together and supporting one another.
Azad Zangana is the head of GCC Macroeconomic Analysis at Oxford Economics. I always enjoy talking to you, Azad. Thank you for coming in.
Thank you.
Appreciate it. This is Mira Business FM.
Mira Business FM. The sound of success.
Good morning, it's 8:30 a.m. and this is the news on Mira Business FM. These are the headlines. Dubai is upgrading its road network using artificial intelligence and big data. The new system helps monitor road conditions in real time. It works without disruption traffic. Officials say the emirate has achieved a road quality score of nearly 97%. Advanced tools detect cracks and measure road smoothness. This allows maintenance to be planned early, and the approach has improved safety and traffic flow. It has also raised driving comfort to around 89%. The Emirates Agriculture Conference and Exhibition 2026 has wrapped up successfully in Al Ain. The first day event brought together farmers, businesses, and experts from across the UAE. It focused on sustainability, food security, and innovation. More than 50 experts took part in discussions alongside 200 Emirati farmers and dozens of companies and startups. Officials say the event highlights the UAE's strong commitment to developing its agriculture and food sectors. Iran's Foreign Minister Abbas Araghchi held high-level talks in Muscat with Oman's Sultan Haytham bin Tariq. The discussions focused on regional cooperation and safe maritime movement. Talks also highlighted a coordination among countries along the Strait of Hormuz. This is seen as the key to ensuring secure shipping routes. Iran's Foreign Minister Araghchi said neighboring countries remain a top priority, and he added that safe transit is important for both the region and the global economy. And now, a quick market and currency update. Bitcoin is trading at around $79,100, and for those tracking remittances, 1 dirham equals about 25.66 Indian rupees, 75.82 Pakistani rupees, 33.40 Bangladeshi taka, 16.51 Philippine peso, 14.33 Egyptian pound. Meanwhile, 1 British pound is equal to 4.97 dirhams today. That's the news for now. Follow more news on our website, mirabusiness.fm.
Mira Business FM, where business comes to talk.
This is the Morning Drive. The UAE's startup surge is getting a new twist, and it's one that moves away from flashy pitches to trust-based investing. And it's kind of rooted in the culture of the region. What are we talking about? It's a new TV show. Manish Dubey is a media veteran, 25 years across Disney, UTV, Ajtak, the news channel, Star News as well. And he's now leading a show called Falcons of Majlis, which is a new investment series. And the aim is to reshape how founders connect with capital in the region. I think that's the way it's being pitched as a show. And he's here. Manish, good to meet you.
Thank you, Tim. Thank you for calling.
It's good to have
Lovely
you
office.
with us. Do you like our
I loved your office.
you like the green and the plants?
Loved the energy, love your camera, love your technical setup, everything.
it's
And
gonna
loved your
become-
energy, in fact.
It's going to become a media loving in a minute, isn't it? Let's talk about the show. Look, we've all seen these kind of startup pitch shows,
Yes.
right? They're famous in almost every market, TV market. So founders stand on stage and they battle for investment checks. What was the gap you guys thought in the startup kind of media landscape? Because this is a new format. What are you what problem are you solving?
I think what we believe completely at the Falcons of Majlis is trust. The word trust plays very important role. Respect, again, that's part of UAE's culture, tradition. So we will focus on that respect, which means, like you rightly said, what would be the difference, right? So in our show, founder is not going to stand.
Gotcha.
Founder is going to sit with the Falcons, with the investors.
Okay.
He will not be judged on the numbers or on the presentations. He will be judged on the intentions and how passionate he is for his business. for his venture. So the evaluation process is more on a one-to-one basis.
Right.
Like the investors, they will try and understand the founders, his passion, his motive towards doing the business. That's the key element what the investors will be trying to
Okay, so I suppose, so it's more about when you talk to somebody, a great idea is a great idea, great numbers, a great business plan, a great pitch, that's a great thing. But this is kind of feel, isn't it?
Exactly. The
Almost,
feel
right?
is
So-
very much important here.
Yeah, okay.
Because the business side of it, the way we are structuring the entire episode in such a way that before appearing into the majlis, his business acumen, his business numbers, everything has been taken care of by the shortlisting committee, which we are calling it Majlis Council.
Okay.
They will be working on the numbers. They will evaluate the business, the proposals, their rationals, everything. On the show, when the startup is appearing on the show in front of Falcons, they will be evaluating him as an individual or her as an individual.
Okay.
That's the most important thing.
All right then. So you're jumping in at a different stage in the founder's journey,
So
aren't you?
it's more human.
Yeah.
It's more one-on-one rather than bashing his business ideas or bashing his numbers or demeaning him in terms of his business acumen. We are not going to do that.
So none of the pitch kind of theatrics.
No drama, no theatrics.
Okay.
It's more of it's more relatable. That's the most important thing.
Gotcha. Okay,
Yeah.
so it's a shift in kind of the usual format in many ways, but the setting, the kind of the Majlis concept, it's in the title. That's pretty distinct from what we're used to culturally here in this region. Everybody's aware of the Majlis idea, but that's going to reshape the kind of dynamic between the founders and the investors because that's quite intimate.
Exactly, and it's promise to access. What we realized while working on the format is that in UAE especially, money is secondary. What matters is the respect, trust, and the access. So what we are providing to the startup ecosystem is the access to the Falcons. If you have a great idea, if you have a great business plan, if you are passionate towards your work, come to us. We'll fund you. And we are giving one promise to each and every startup that irrespective whether you will get the funding, capital or not, in some way you will get something from the show. If you're appearing on the show, that startup will get something. Maybe it could be smart capital. Maybe it could be access. Maybe it could be marketing support. Could be anything. But the promise, the deliverables from our side is very clear. The day startup is appearing on the show, he or she will get something out of it.
Okay, and access is kind of the key here, isn't it? That's the driver. All right then. So it's different from your usual formats, your Shark Tank, whatever else, in terms of outcome and intent. What were the lessons that you've learned from those that led you in this direction? Why the change? Because those are really successful formats.
Yeah. So I think we are just learning from the big IPs. And apart from that, the biggest learning for us is that we are going to respect startup. One thing one need to understand that the kind of passion and the kind of hard work one goes through while building his vision, it's very painful. No one has the right to demean that startup if he has the fund. So that's the biggest differentiator we are trying to bring in this show, where the respect, the integrity, the value system we are trying to bring in that, and storytelling. The most important thing is storytelling. How that startup is narrating his story, we are going to evaluate that thing.
Okay, and this is obviously investment storytelling, isn't it? So the process is curated kind of founder stories, the scrutiny phase.
Yes.
the chance then to get this kind of ticket to the Majlis,
Yes.
to sit with the founders, to get that access.
So
and then
these are
it's-
just added layers in the show.
Sure.
Yeah, exactly.
So then you've got these kind of the discussions, kind of the closed door discussions, and we're kind of eavesdropping on those discussions, watching the show. Is that? I mean, kind of as a viewer.
Exactly. Absolutely.
Right. Okay. What kinds of signals are you seeing from regional investors, from family offices, from what's the interest in this kind of approach?
A lot. Trust me, Tim, a lot. And the reason I'm saying a lot because, the kind of experience what we are bringing in from India also, like Mr. Shetty is mentoring the entire thing.
This is Sunil Shetty.
Mr. Sunil Shetty.
Okay.
One of our Bollywood star, Chitrangada, she would be hosting the show.
Right.
Right. So we are adding the right quotient of glamour, which will lead to the marketing side of it. We are adding the right credible names to the show, which will add the capital side of it. At the same time, when I'm saying that a startup will get something when he appears on the show, when she appears on the show, we are doing a lot of barter deals with different brands so that they can promise us on behalf of startup that they are going to get something from the show.
Got you.
Yeah.
Okay. So there's always this kind of carrot that's
Absolutely.
being dangled that
And
there is
generally,
something
it's not
to
a carrot.
come.
It's a
No,
genuine thing.
you know what I
Yes.
mean.
Yeah,
No, I don't
yeah,
mean that to
yeah,
be
yeah.
demeaning or rude in any way. It's just that's the kind of, you're always trying to attain something to
Absolutely.
get somewhere. Okay. So Sunil Shetty, a very famous actor, film producer, also entrepreneur, has a very specific role. He's not negotiating deals, though,
No.
in this.
He's bridging the gap.
He's kind of the face, not the host, but the face of the show.
He's connecting the investors world with the
Right.
startup world.
So he's going to define who gets access to the
Exactly.
Falcons.
He's the authority. He's the mentor. He's going to set up the entire thing from his vision.
Right.
Right. So the most important thing and the role of Mr. Shetty is that he's building the entire Majlis, if I can say that.
Yeah.
Where he's handpicking the Falcons, the investors. He will be constantly in touch with the Falcons. He will be constantly in touch with the shortlisted startups.
Gotcha.
We will mentor them. We will groom them. We will literally, the team is going to take care of the entire presentation side of it.
Okay.
And the startups, they are going to face Falcons in that fashion.
And Sunil Shetty has a record of doing this. doesn't he?
Absolutely.
In
Absolutely.
India,
You won't
he-
believe Mr. Shetty has more than 35 startups invested already.
Right.
He's like, if I can call him the face of Bollywood when it comes to startup ecosystem is concerned in India. In fact, he launched 3 startup reality funding show in India, down India. So that's the reason we thought that Mr. Shetty is the right face for this kind of setup where we are trying to bring a different concept, deeply UAE rooted reality funding show in UAE.
Okay. So it's more about the person than the idea, as far as the viewer is concerned, the potential rather than the business pitch, right? Talk me through how the founders are evaluated beyond just that business idea. What can you
First,
tell us about that?
The most important thing, that founder has to have the UAE nationality.
Right.
The business should be related with UAE problems, and he's solving the UAE problems. That's the core basic premise we are considering for the show. The third one, how passionate he is in terms of his venture, and the most important, how good human being he is, because
Okay.
that will define his venture, that will define his culture, and at the end of the day, that will define his vision towards building that business. So that individual story matters a lot to us.
Right, okay. For storytelling purposes, I mean, I can understand that. It makes a great deal of sense if you can create a
And that's what
narrative.
we are trying to sell. So in a typical way, a startup can go to DIFC and go to any investor and pitch his idea and get the fund, right?
Yeah.
But what we are trying to sell here is the founder and his story,
Right,
not his
okay.
business plan.
And the inherent
In a
value
storytelling in a
in that
story-
human being.
Exactly.
Okay. I mean, there will be cynics that will say people in business aren't all good people. Why does that matter? But I suppose for the storytelling aspect of that, that's what sets this show apart. Is that the...
Yeah, that matters a lot.
Right, okay. So the idea is to shift focus to see whether a founder is really ready to build something that's meaningful, that has value, that offers something. This is not just about raising capital. So that's the difference. What kinds of startups are you looking at? What kinds of ideas from founders do you think are most likely to succeed from a model like this?
So finally, what we have been going through, or what we've been getting calls and everything, it's more of a related with the fintech and the fintech sustainability side of it, tech startup a lot. Especially that's the base of UAE. But frankly, apart from that, we are looking at the space where some kind of innovations in terms of entrepreneurship also will work. So imagine Tim coming to us with some kind of innovations in RJing. Tim wants to do some kind of RJ classes in UAE and build talents. Okay. So somewhere you are building and you are contributing to the UAE's economy. So that's the most important thing. It's not necessarily it should have the tech background, some innovations and some talent hunt, which is indirectly contributing to the UAE economy. We would love to have them on board.
One of the things I noticed from reading about you guys, reading about the show, is that it is nation aligned. And you've made that kind of quite clear in the last few minutes. But it strikes me that one of the things that's really important is cultural context. You're designing a show. You're based in Mumbai, but you're designing a show for a Middle East audience. And I think, you seem very aware that we want to pitch this in the right way. I mean, hence the Majlis.
Absolutely. And that's the vision of NKN Media, a company which I'm representing right now for the Falcons of Majlis. We are very much clear that more than 200 plus nationalities are living here, right? So the culture is different. The sensibilities are different, and we have to match up all the traditional values of UAE along with the 200 nationalities, their style of thinking. We are trying to build everything together. And that's, someone was telling me yesterday that somewhere it represents India also. I said, so what's harm in that? So for a startup, imagine if that startup is a Hindi speaking guy and wants to express himself in Hindi language. I'll say, please go ahead. What is most important is your passion towards your work, right? Your idea. That's the most important thing. And we would love to have him on board.
As long as it makes a good show. Yeah. I mean, that's the point, isn't it? Okay, so what about the Falcons? I need to ask you about the Falcons because they're the ones that are going to be offering the resources in the end, I suppose. You probably can't tell me who the Falcons are going to be.
That's the most secretive part.
I had a feeling it would be. Yeah. But what types of Falcons?
I think we are focusing more of a family offices.
Okay.
People with monies. People...
Useful.
Yeah. People who believes in people. That's the most important.
Right.
So that rationality has to be there.
So we can expect some famous names from the UAE,
definitely.
maybe the region,
Definitely.
or is this just UAE for now?
So our positioning is very, very much clear when it comes to Falcons of Majlis.
Yeah.
It's by the UAE for the UAE. Okay. So the faces, Falcons would be from UAE, and the startup would be from UAE only. That's our season 1.
Okay. I mean, with lots of these shows, I mean, I'm aware of a couple of shows in the UK. That's where I'm from, obviously. I'm well aware of The Apprentice, Donald Trump.
Yeah.
I can't think of anybody from those shows who've gone on to a major business success off the top of my head. I'm not trying massively hard, but it doesn't jump to mind straight away. But I guess that's not the most important thing. The entertainment side is the most important thing. But it also strikes me that were you to get a really successful idea, something that really kind of fits with the mood at the moment, maybe, that would be a great thing. So what would success look like for this show to you? How would you categorize a hit?
How many number of startups we tried and make them successful. That's the success we are trying to achieve. It's not about generally, it's not about the TRPs, it's not about the viewership. What we are trying to achieve, how many startups we are building in season 1, that's the most important thing. And that's the takeaway we'll be taking in season 2, and claim that we have funded these many startups, we have mentored these many startups, and we changed the vision of these many startups. That's the most important thing.
Just the contribution, really.
Yes. So it's if generally we at NKN Media, we are not focusing on numbers. We are purely focusing on helping and growing startups and their vision.
But if you get the numbers, that's a nice side benefit as well.
Of course, that's the bonus. That's the
Right.
bonus. But the vision is not that. The target is not that.
Okay. What do you think the show says about the startup funding culture, where we're headed globally? Because there is so much emphasis here in the UAE on startups to encourage people to go into business. It's great for an economy. You employ people, you contribute. I mean, that's a good thing to do. But what does something like this tell you about that attitude?
I think you need to see in two different aspects. One is businesses, which has a core business value, which has been done at some corporate office, DIFCs, and the Hub 71 and those side. And the second one is businesses through the content side. So what we are trying to build is businesses through the content side, through the storytelling. So this is the new. It's an innovation which Shark Tank has been doing it for the longest period of time. But again, that's a TV format. What we are translating this TV format into a content side of storytelling, which is content leads to commerce. That's the idea we are trying to approach in this.
Okay. So where do we watch it, by the way? What channels?
So right now we are in talks with few OTT channels.
Right.
We are in talks with few broadcasting channels. It won't be on GCC for sure, because we believe that this is a serious show. This is a business show, and let's treat it like a business show.
Right.
So it will be. I can give you names of Indian channels, TV channels, which we already logged the deal. It will be on the TV Today network and Aaj Tak,
Right.
on their international stream. We are in talks with some OTTs, and definitely the content will be on digital media across all NKN Media verticals.
Okay. Well, I was going to ask that. What about here in the UAE? How would we watch it here in the UAE?
I think it's on digital stream of Aaj Tak and TV Today. It's on TV.
Okay.
For sure, you can watch it on.
All right then. So season 1's going to focus on startups, UAE-specific challenges. Is this a model that you're going to think about expanding beyond the UAE?
Definitely.
Regionally, maybe?
Definitely.
Internationally?
So right now, season 1 would be, we are focusing on UAE. Season 2, we might spread it to GCC. Season 3 could be your Indo-GCC kind of exchange of ideas and startups.
Okay.
Then globally. So the vision is very much clear how we are going to proceed further.
All right then. Well, let's wait and see. I know that you launch, May the 8th? Is that right?
Right now, yes, the date is on 8th.
So we'll come back to you on that. But
And
that's...
I would love to have you on that day, on the day of our launch.
I think
Please block your
it's a fascinating idea. It is the more, I don't know, human aspect of it. I'm interested in that, the storytelling, the narrative side of it. Focus of Majlis is the show. It's launching hopefully May the 8th. Manish Dubey is the show runner. He's the guy kind of running the whole thing. And I appreciate you coming in to talk to us.
Thank you so much, Tim. Thank
Good to
you
have
so
you
much
here.
for calling me. Thank you.
This is Mira Business FM.
Mira Business FM. The sound of success.
Good morning, it's 9 a.m. and this is the news on Mira Business FM. These are the headlines. Iran's Foreign Minister Abbas Araghchi held high-level talks in Muscat with Oman's Sultan Haytham bin Tariq. The discussions focused on regional cooperation and safe maritime movement. Talks also highlighted coordination among countries along the Strait of Hormuz. This is seen as key to ensuring secure shipping routes. U.S. President Donald Trump says tensions with Iran may be nearing a turning point. He said continued military and economic pressure has weakened Tehran, and he added this could open a door to possible resolution. U.S. President Donald Trump also pointed to divisions within Iran's leadership. He said this could speed up any outcome. Russian President Vladimir Putin is set to meet Iranian Foreign Minister Abbas Araghchi in Moscow today, according to Russian media. The talks come as Russia and Iran continue to strengthen ties. Both countries face Western sanctions. And officials say the meeting will focus on ceasefire efforts and the latest regional developments. Oil prices surged at the start of Asian trading today. Gains were more than 2%. Brent crude oil rose to about $107 per barrel, its highest level in weeks. WTI crude oil also climbed, reaching around $96 per barrel. In contrast, gold prices fell as the US dollar strengthened. Spot gold slipped by 0.3%, continuing last week's decline. Other metals like silver, platinum and palladium also edged up. That's the news for now. Follow more news on our website, mirabusiness.fm.
This is the Morning Drive. It's Mira Business FM. Good morning to you. Next up, we're talking SMEs, small, medium enterprises, and financial fragility. That is coming up.
Mira Business FM, where business comes to talk.
It's the Morning Drive. It is Mira Business FM. Thank you for the messages this morning. If you are interested in Scale or Fail, our podcast all about how to scale your enterprise. We were talking a little bit earlier to a gentleman who's going to be running Falcons of Majlis, which is a new kind of startup TV show. That is now up online if you want to watch that again, by the way. Thanks for the messages. Next up, SMEs are under pressure from rising costs and uncertain demand. But lots of numbers start with, I guess, the numbers that leaders are not seeing clearly, if that makes sense. Now, on Morning Drive, we often try to uncover the financial blind spots that are holding businesses back at the moment. It's been a lot of the conversation, no less so next up. Zaid Abu Baker is the founder and CEO of Compass Point Consulting, and he's here hopefully to explain where money's slipping through the cracks and what to fix fast. So a Fix It Fast audit for leaders struggling to see the full picture, and maybe even some ideas on how to plug the leaks. It's kind of what we're going to be doing, Zaid. Welcome. Good to have you here.
Thank you very much for having me.
You're very welcome. So my observation to start with would be this. Business owners in Dubai working harder than ever. It's the nature of things right now. But, cash flows are relatively stagnant, I guess, in lots of cases. The problem often isn't revenue. It's kind of financial fog obscuring where the money is actually going. The thing at the moment is it's just tough times now, isn't it? It's hard.
It is, and I think that it's caught many businesses, particularly founder-led SMEs, unaware.
Yeah.
They are not prepared for what they're facing at the moment. And you mentioned about cash being stagnant. The reason for that is founder-led businesses, SMEs, tend to want to chase revenue. And there is an adrenaline, a buzz that comes from signing new business, from winning new clients, right?
For sure.
And when we look to sort of inwardly towards ourselves, we always try to scratch that entrepreneurial itch to grow our businesses. And it's the top line, typically, that gives us the most satisfaction. But when you start to dig deep into an organization's financials, what you tend to see in a lot of cases is revenue growth, but profit doesn't keep up. So, for example, you might be growing your top line by 50%,
right,
but your bottom line grows by 5%. And then founders who are excellent at running their businesses from a commercial perspective, being how to sell their service or their product, get surprised when they look at their bank statement 3 months down the line and they see, well, I've got all these sales, I've got all this revenue, but it's not converting to cash. And you mentioned something in your introduction about rising costs. That concept of rising costs coupled with chasing the top line and not having a profit or a margin discipline is what's catching a lot of SMEs out today.
Okay, so what we need to do, and I kind of mentioned this in the introduction as well, is uncover the financial blind spots. Well, let me just ask you that as a question. What are the most common financial blind spots that you're seeing now?
So the first and foremost thing is much of the financial reporting that is available to SMEs is backwards focused, i.e. you're looking in the rear view mirror all the time.
Right.
And there's this notion or perception that forward forecasting or looking at predictive financial tools that can let you see a little bit further forward are reserved for big businesses. That's not the case. There are tools out there that enable that blind spot to be tackled. And a lot of the time it's sitting down and looking a month, 2 months, 3 months forward. And the biggest piece of advice I give to founders, SME owners that work with Compass Point is put in place cash flow discipline by making sure that you sit down Monday morning, first thing, how much money is in the bank, what's going in, what's going out, and let's do that for the next 3, 4, 5, 6 weeks. So you know where you're going to land. And it's not about looking back. We're actually taking a step to look forwards here and trying to figure out what the problem's going to be, when that problem's going to arise, and then we put in place a mitigation strategy.
Do you know what? I in my mind, I'm thinking one of the things about that advice. And that's great advice, because if you're on top of the money, then you're on top of the business. I mean, clearly that's where you need to be. Why else are you in business? But I would contend that for a lot of founders, it's pretty scary looking at the bank account a lot of the time. I mean, that has to be it, surely.
It is. And it's, I tell this story during new business proposal meetings quite a lot of the time.
Right.
I spent 20 plus years as a finance director, CFO, financial controller, and in corporates. And I would always say that if someone saw me walking down the corridor, they would turn around and run in the other direction. Right? So it was always a case of, let's move in the opposite way to where the finance guy's coming from, because he's going to come and ask me about my expenses or cut this or cut that. And that's the wrong perception in my mind, because what Compass Point, what I've tried to build, what me and my colleagues and my co-founder are trying to build in terms of this organization is a business partner. You don't have to be afraid of the numbers. You just have to be willing to sit down and look at it. Because yes, it can be intimidating, and yes, there is some fear and some trepidation that people sort of approach their financials with. But we can unpick that. We can figure it out.
Well, we can. Do you know what? Actually, last week we had the CFO of our whole company on.
I saw it.
Yeah, and I just thought, how am I going to approach this interview? So I was just really nice to him. Because he signs the checks, obviously. But I understand that. But part of this is that kind of sentiment and that kind of mindset, isn't it? I mean, we talk to a lot of business owners on Mira Business FM, right? And they'll say the business is profitable, and yet at the end of the month they're stressed about payroll. Profitable on the P&L and broken the bank kind of thing. What is it that? Why do people not take the advice? Why do so many businesses struggle with cash flow, despite the fact that revenues are often pretty steady?
So in the GCC, there is a tendency for businesses to struggle with receiving payments. One of the biggest challenges that we face here is that most companies that you deal with will want to pay you based on terms. And that could be 30 days, 60 days,
90, yeah.
And now we're seeing 90, and then 90 becomes 100, and 100 becomes 120, and so on. And they don't really know how to deal with it. And I tell you, what I see most often is the founder, the CEO, the principal, doesn't want to have that conversation with the client, because they feel like having a tough conversation with the client is going to damage the relationship, is going to, the client may turn around and say, hey, you know what? Not happy with getting paid on 90 days? I'll find someone who is.
Yeah, okay.
And that, if I kind of call it a sort of a division between the management of a relationship with a client versus what a finance person or a fractional CFO should be doing, is taking that off your plate and allowing you to run your business. And it's almost a little bit of good cop, bad cop.
Yeah, okay.
And I think that that's something I get asked to do quite a lot, is go make a nuisance of yourself, Zaid. Go try and get this debt collected. And I'm happy to do that, because that's my role.
How do you approach that then? When you go and sit with a client who is maybe difficult, extending the credit terms beyond what's reasonable, because that person may have the same problem.
Yes. And I think that you have to cater your strategy depending on who's across the table from you. If you're dealing with a multinational corporate that has a policy internally which says we just pay people on terms, 60 days, 90 days, and you'll get paid, there's often not a lot you can do about it, because if you want to do business with that big MNC, that's the cost of doing business.
Right.
But if you're working with independent businesses, there is a way to try and negotiate. So could I give you 5% off if you pay me within 15 days? Could that be an early settlement discount? What about if you pay me 50% in advance and 50% when you're happy on completion? That helps my cash flow, and it helps you because you're not fully committed to the cost before you've seen what I can deliver. When it's government clients, that's a totally different strategy that has to be employed, particularly the government clients in Saudi Arabia, where they are somewhat handcuffed by internal procurement laws where you have to navigate through many, many portals and procurement legislation and try to get sort of things ticked off all the way. And this, again, is something that founders, SME owners get really excited. They say, oh, Ministry of ABC is going to give me $1 million dirham contract or $1 million Saudi Riyal contract. Wow, amazing. But 6 months later, haven't been paid. And the reason they haven't been paid isn't because the ministry doesn't want to pay them. It's because they haven't followed the process. They haven't done the registrations. They haven't gone through the actual mechanics of what's required.
Procurement portals are pretty hard to navigate, let's be honest.
Yeah, you need to know what you're doing.
You really do, yeah. I have to admit, I've struggled with one a lot recently. It's pretty tough. Okay, but it is how you approach it, and there are ways that you can offer. You can kind of incentivize, is basically what you're saying. If it, not through portals, but when you're, credit control is a really tough aspect of business, but incentivization is one way of doing it.
I think so, and I think the other way of doing it is making sure that you have good relationships.
Yeah.
We're in a people-oriented environment where people are doing business with people. So if you are taking on a new client, one of the things I always advocate for is have a client onboarding form. And on that form, make sure that you've asked, who is my finance contact? Who is my payables contact? And get in touch with that person at the outset. Hi, this is me. I'm going to be sending you an invoice on a monthly basis. If there are challenges, please get in touch with me. And you have a counterparty to then go to. Much of the time what happens is you rush, you onboard business, get to the end of the month. Oh, I don't even have the tax registration number. I don't even know what their VAT number is. Oh, now I'm 5 days delayed with sending them an invoice. Who do I send the invoice to? It's just about having a little bit of upfront discipline in collecting information and making sure that when you have completed your work, you know who to send that invoice to as well.
And the other side is, as well, I suppose, you have procedures in place, you have processes in place, you have it's almost an attitude, isn't it, to business? That's a real bonus, I guess. If an SME owner has, say, a 10% leak in their margins, Zaid, where is it usually hiding? Is it in procurement? Is it unoptimized payroll? Is it dead inventory?
So quite often it's sitting in a lack of understanding of where profit's coming from. So what I mean by that is I notice quite a lot businesses have many streams to their revenue. So they could have several products, several services, different variations of those services or products, and they bundle everything together as one line called revenue and one line called profit. But if I don't know which ones of those services are making me 30% margin and which ones of those are at minus 5% margin, I'm unable to then pick out which of my customers are profitable and which ones are loss-making. And that's really where the biggest leaks come, particularly in service-led businesses. Service-led businesses, what tends to happen is a concept that I refer to as over-servicing. So you bring on a client who's paying you, for argument's sake, 1,000, but you're actually delivering to them 2,000 worth of service repeatedly month over month over month. And then you look at your bottom line and you're wondering where my margin leak is. Well, my margin leak is because I'm having to pay somebody to overservice them. Or I'm having to pay to bring in a product via air freight to get it to my end customer, and it's eroding my margin, but I'm not really seeing that because I can't see the different components of what it takes to deliver that service or that product. So that is where I see a lot of SME type businesses struggle. It's just a lack of knowing where the profit and loss is coming from.
You've got to have a view on everything in your business, haven't you? You've really got to have control. I mean, one of the things I wanted to ask you this morning is it's really all about that and knowing where you're going. Because if you're weak from a forecasting perspective, that's going to show up in day-to-day operations and affect decision making, isn't it?
It has to, 100%. And again, I think that this comes down to the attitude that you take towards running your business. So there are some that will say, okay, it's November 2026. I'm now going to budget for 2027. I'm going to spend 3 weeks doing a budget, and then that's the end of the story. That's my forecast and budget done. Those types of businesses, if you imagine someone that did that in November of 25, by the time they've got to March of 2026, it's all out the window. There are those assumptions that they are making decisions on are no longer valid. So the best way to try and get forecasting to help you run your business, in my opinion, is to have it done on a rolling 12-month basis. So you're not looking at calendar year, you're always looking 12 months into the future. And it sounds like a really hard thing to do, but it's not, because once you get into that rhythm where, okay, we're on today towards the end of April, we'll close our April books, we'll now look at a forecast from May to April 2027. Then you do it the next month and the next month. And once you're in that rhythm and it takes you half an hour to update it if you have the right tools in place, you're then making data-driven decisions every month because you're up to date and you're live and you're taking into consideration what's happening around you, as opposed to, well, I made that assumption in 7 months ago and now I'm still trying to run my business based on that assumption. It's never going to pan out for you.
Yeah, so you get your head out of the sand.
Indeed.
Yes, okay. That was very politely put. Look, we all have, in our daily lives, we've all got subscriptions or software or retainer fees, whatever it is that we've forgotten about. You know, that's normal. That's just a part of kind of modern day convenience living, I suppose. It's the same in business, isn't it? How do you advise a CEO to conduct an audit of their expenses, a zombie audit perhaps, without disrupting operations?
I actually, probably an unpopular view, but what I did, and it's a real life example, is we took the bank statement of a business that's turning over 15, 16 million dirhams a year.
Okay.
And everything is linked to the CEO's credit card, personal HSBC card, that gets debited for every subscription that you could possibly imagine,
right,
on a monthly basis. And we tried for a couple of months to get some focus on this. And in the end, I said, look, I'm going to take an action here. You may not like it, but actually, I think this is going to help you. And we got his PA to call up HSBC and cancel the card. So every direct debit, every standing order that was sitting on that card was then going to bounce. And I said, if anyone screams that their subscription got switched off, we'll relife it, we'll put it back on because we know it's being used. And for all the other ones, you'll know that no one was using them anyway.
Okay.
And it saved $56,000 a year in expenses, in random subscriptions, for all sorts of things that were not needed.
Like what kinds of things?
So things like a subscription tool that checks people's grammar on an email before it gets sent, subscription tools for social monitoring and sentiment analysis, subscriptions for premium tools for video editing when they were not doing any video work, all sorts of stuff, just randomly sitting there. And
so no screams in that office?
Well, there were a few.
Or fewer.
Fewer.
The new.
Yeah, fewer. And the ones that got put back on were the ones that you would expect people to ask for. Oh, my ChatGPT Pro stopped working. All right, we'll put it back on. This stopped working. Right, we'll put it back on.
Right.
But sometimes it's just as simple as somebody coming in with a third-party view. And as a fractional CFO, the benefit that I have is, I don't need to be friends with anybody at the end of the day because I'm a fractional CFO. I can go into that business. I can say to everybody, my role here is as an independent. I am here to do a job, and I don't need to get involved in office politics and anything to do with the ins and outs of how things run on a day-to-day basis. I'm just simply here to do this particular task and go in and do that. Sometimes that actually builds a better relationship because they're like, oh, this guy's really interested in doing the right thing for our business. He's not just here to consult and advise. He's actually here to do something and action it. So you end up kind of getting a positive impact from taking, sometimes a meaningful step.
See, that's interesting. That's kind of counterintuitive, but I I see what you mean. Okay. So that's $56,000 a year. That's a major saving.
Indeed.
That's certainly a salary or two, or I mean, it's a huge amount of money, based on real data as well. So if you walk into a struggling SME today, what's the first thing you ask? What's the first piece of data you would ask to see? Is there one metric that tells you more about the business's health than any other?
I actually take a slightly different approach.
Okay.
What I've learned over the course of the last couple of years is doing a big investment in the pre-engagement phase with any client pays off in spades. So the first thing I would do is sit down with the most senior person, whether that's the CEO or the founder or shareholder, and I would just hear them out. What is keeping you awake at night? Where are you struggling? Now, don't tell me about your life story, tell me about the numbers and the financials, but where is it that it hurts? What's the challenge? And we then go in and do something called, for lack of a better expression, a diagnostic. It's simply, okay, you told me that these 3 or 4 things are really problematic. So I'll give you another example. I sat with a founder of a business last week, and they said to me, the biggest thing keeping me awake at night, biggest challenge is I don't know where everything that I'm purchasing in terms of inventory is going. There are gaps in the system. And so our first port of call in that case would be, all right, you have an ERP, you have a barcoding system here, where's the gap? What's the leak? To use your expression. So we would always listen to the founder, listen to the CEO, and then try to identify where we can help. Because in our line of work, you've got to go in fast and hard and make a difference. And when a founder or a CEO or a business owner can see that you've gone in and immediately been able to make an impact and solve a problem, you go to the next one and the next one. And that typically is what we look for. And it's no single KPI or no single metric. It depends business to business. But you hit on it first up this morning. The majority of the challenges we see right now is cash.
Yeah, well, it just seems, I mean, we talked to a lot of people, and that's kind of been, it's almost a mantra at the moment, you know. Lots of founders try to be their own CFO, and naturally that's the case. I know, I see the raised eyebrows. Until you get to like a certain size, right?
Yeah.
So at what point does doing it yourself start costing you more in opportunity cost than hiring, you know, the right person for that role? An expert.
I'm very biased in that opinion.
You should be.
So I would say you should never be your own CFO, because if your skill set is being charismatic, visionary, coming up with new ideas, services, building relationships, networking, selling, go do that. Why spend your time worrying about the numbers? Give that to somebody else to do, because immediately there's an opportunity cost. And that's something that I say, or see rather, a lot. It's, right, I'm going to spend X number of hours doing financial related things. But that's at the cost of going and pitching some business or going and doing something more value additive that you can do in the business. So I would say almost immediately. But if you're asking for specific size and scale, what I see today is any business that's doing somewhere between about 1.5 million, 2 million dirhams in turnover, up to about 30 or 40 million in turnover, is not in need of a full-time CFO, because the business isn't at the scale. So a fractional CFO would work for you. Once you start to tip that and you go sort of over that 40 million dirham mark, $10 million mark, you're typically going to have 30, 40 employees. At that point, you probably start to think about, well, maybe I need a full-time in-house option. But our clients are sometimes a bit bigger than that as well, and the fractional model still works for them. It all depends on the nature of the business. But I would say, don't play to your strengths. You know, do the things where you can add the most value to the business. And if financials and numbers and forecasting and budgeting isn't your bag, you don't enjoy that stuff, you don't like it, let someone else get it done for you.
It's all good common sense stuff. We're a little bit short on time. Actually, we're running slightly over time. I'm going to push it a little bit. I wanted to ask you a couple of questions just before the news.
Sure.
Looking ahead, what financial habits are going to separate, this is the word of the moment, resilient SMEs from those that may struggle?
So I think the ones that will do best, and I sort of add to this that I've been in the UAE a very long time. I've seen it bounce several times over, and I have no reason to believe it won't do so again. But the businesses that will be resilient enough to take advantage of that bounce are those that practice data-driven discipline. Because if you are a founder that's making decisions and you're like, well, I feel like that's the right decision, instinctively I think that's the right answer, it's not going to work. Because you have to have the information at hand to make the best decision available. And if you're data-driven, disciplined about the way that you operate, you're going to end up doing better than the person who doesn't.
The last thing, and I want to squeeze this in quickly, they're all looking at me now because I know I need to go to the news, but I came across this quotation online, and it's attributed to you, and I really liked it, and I wanted to mention it this morning. I don't know if you said it or not, but you can confirm or deny.
Okay.
Most SMEs don't fail because they have a bad product. They fail because they have a leaky bucket.
Yep.
Is this is you?
It is.
And I really like the bucket analogy. I just wanted you to finish that off, if you would.
Sure. So I think that the place it came from was people spend so much time trying to pour water and fill up their bucket with new business.
Yeah.
Prospects, leads, top of the sales funnel, as much as they can do in terms of generation of new business. But then they forget about it. They pour into the top of it, and then they say, well, okay, but then what's the cost to service that? Am I hiring this person? Is it the right hire? Are they at the right level? Are they fully utilized? It's just leaks all the way through.
Yeah.
And the reason for that is people have this tendency, and I say it again, to have a kind of adrenaline hit of winning new business. And listen, I'm no different to the next person. I like to win, right? And everybody likes to win. But you have to have the discipline to say, you know what, at that price, it's just not worth it.
Yeah. And if your bucket's got holes in it, you're never going to fill it, are you?
Absolutely right.
There you go. Okay, SME Financial Fragility on the Morning Drive. Zaid Abu Baker is the founder and CEO of Compass Point Consulting. Zaid, it's been good to talk to you. Thank you.
My pleasure. Thank you for having me.
Appreciate it. This is Mira Business FM.
Mira Business FM.
Good morning. This is the news on Mira Business FM. These are the headlines. Dubai is upgrading its road network using artificial intelligence and big data. The new system helps monitor road conditions in real time. It works without disruption traffic. And officials say the Emirate has achieved a road quality score of nearly 97%. Advanced tools detect cracks and measure road smoothness, and this allows maintenance to be planned early. The approach has improved safety and traffic flow. It has also raised driving comfort to around 89%. The Emirates Agriculture Conference and Exhibition 2026 has wrapped up successfully in Al Ain. The five-day event, brought together farmers, businesses, and experts from across the UAE. It focused on sustainability, food security, and innovation. More than 50 experts took part in discussions alongside 200 Emirati farmers and dozens of companies and startups. Officials say the event highlights the UAE's strong commitment to developing its agriculture and food sectors. Iran's Foreign Minister Abbas Araghchi held high-level talks in Muscat with Oman's Sultan Haytham bin Tariq. The decisions focused on regional cooperation and safe maritime movement. Talks also highlighted coordination among countries along the Strait of Hormuz. This is seen as the key to ensuring secure shipping routes. Iran's Foreign Minister Araghchi said neighboring countries remain a top priority. He added that safe transit is important for both the region and the global economy. And now, a quick market and currency update. Bitcoin is trading at around 78,000 USD. And for those tracking remittances, 1 dirham equals about 25.66 Indian rupees, 75.82 Pakistani rupees, 33.40 Bangladeshi taka, 16.41 Philippine peso, 14.33 Egyptian pound. Meanwhile, 1 British pound equals 4.97 dirhams today. That's the news for now. Follow more news on our website, mirabusiness.fm.
Mira Business FM, your daily guide to the markets, money, and more.
It's the morning drive. Dubai's property market seeing a clear shift towards branded residences, and that's kind of a blend of hotel service, if you like, and longer-term living. Now, there's a new project on Dubai Islands, and that's it's kind of the latest move in that direction. Joining us now, Nick Pilbeam. He's the Chief Commercial Officer at Cheval Collection. As the group steps into this space, there is their new beachfront branded residences development, and that's what we're going to talk about. Nick, it's a pleasure to have you with us.
Thank you, Tim. Thanks for having me on the show.
You're very welcome. Let's start with the big picture. What's driving this kind of shift from traditional serviced apartments into branded residences at the moment? What are your thoughts?
Well, branded residences is actually one of the fastest growing real estate segments in the world. And actually, Dubai is at the forefront, is known as the global capital for branded residences, followed by Miami. But there are other major cities, London, Paris, Geneva, Singapore, Bangkok, even Phuket are catching up fast. So why is that? That is because branded residences is positive for all three parties involved in these sorts of projects. So first of all, the unit owner, someone that's buying one of these branded apartments, what's good for them? Well, first of all, they have wonderful luxury lifestyle. They get to benefit from hotel-like services, global loyalty programs, and other benefits that they wouldn't otherwise have had on a sort of standard non-branded residential home. So there is really good benefits for the unit owner, which is driving a lot of investor appeal. For the developers, these projects tend to sell fast, and that's good for them for cash flow, for putting the construction, ahead of track and opening as soon as possible. Some of these projects are selling out in 24, 48 hours, and these are 200, 300, 400 unit projects in multiple cities. We're seeing evidence of this. So it's very attractive for developers. And I think for brands, a brand like us, why are we attracted to this segment? Cheval is a luxury serviced apartment operator brand. It's been operated for over 40 years. We operate a number of properties, 9 properties currently trading in London. We already trade 2 properties in Dubai, one on the Palm, Cheval Maison the Palm, and Cheval Maison Expo City, Dubai. So we're very familiar with the market. And this is what we do. We are long-term living player. We've traditionally come from the rental side of the market for the 40 years we've been in. But moving to the side of the market, branded residences where unit owners purchase an apartment and live in it is sort of what we've been doing for 40 years. So we feel it's a natural extension. We're very excited to be part of this. Is our first branded residences project. And also the benefit of working with a brand like us is, as a unit owner, perhaps you're an investor and you want to use the unit for a couple of weeks a year, that's absolutely fine. You give it back to Cheval and we will rent it out through our normal process worldwide to deliver extra returns to the unit owner.
Okay, so win-win-win-win situation. So very strong investor appetite for service living. Your first regional project is Dubai Islands. It's a location that's getting a lot of attention. It's very impressive. And I guess kind of a no-brainer, an ideal choice for your kind of debut beachfront development, surely.
It is. I mean, we're absolutely delighted, and we're working with 2 wonderful partners in Avenue Developments and Wadeen Developers. So, credit to them for all the work they've put into this project as well with us. But I guess stepping back, we have being around for so long and being the only pure play luxury apartment operator in this category, we have a lot of opportunities in development in many parts of the world. So why is this our first one? Well, Dubai is the capital of branded residences worldwide, so that's a natural place to start. We've also been keen to have a beachfront property in our portfolio, so we're absolutely delighted for this to be our first beachfront asset. But I think also from a brand perspective, we're very careful about where we put our brand and what buildings and what properties, what locations, and with which partners. So we're not the sort of brand that just splashes it everywhere we can. We're very selective. And actually, I mean, you've seen the videos and the pictures of this property, absolutely stunning architecture, stunning interior design, wonderful location. We're very positive about this project. We're very positive about launching it now, given the current situation, and actually it's had a phenomenal response so far in the market, both domestically in the UAE, but also internationally. We've had excellent feedback. So we're very pleased. We've spent a lot of time preparing for this, as you can imagine, but we're delighted with this first property, and it won't be our last. We have a lot under negotiation, further properties, branded residences in the UAE, but also elsewhere in the GCC as well.
There must have been some deliberations in recent weeks because, Dubai, the UAE, the region, it's a tough market, and, there's already a strong hospitality culture. And then, of course, regional tensions play into that. Why is it the right moment now for Cheval Collection to enter the branded residences space here, Nick?
Well, we've been around a long time. So, and also we've been in Dubai trading for a few years. We have signed a couple of assets in Saudi Arabia, which we're opening over the next few years. So we're very confident about the Middle East market. We're very confident about the UAE. We're very confident about the recovery of Dubai, how it's going to bounce back as the tensions settle. And we feel, given there aren't that many projects going on at the moment, we thought actually with our partners that it's a really good time to launch. And it's a bold statement of confidence of the recovery and of the short and medium term future for Dubai. So we're very positive about that. And actually, that was just a few days ago, and the overwhelming positive response we've had is a testament to, there a number of other people share that confidence too, which is very positive. And remember, the buyers of these sorts of properties, partly domestic, yes, of course, but also many international buyers from diverse markets around the world. So we're seeing strong demand as well from those markets. So I think that's a really positive in terms of the intent for the future of Dubai.
For anyone unfamiliar with the concept, what distinguishes a branded residence from a traditional apartment or a traditional serviced apartment?
Yeah, so on a traditional residential apartment, if you like, that you might buy or rent, you really don't have the services around that experience, around that lifestyle. So what you do have with the hotel services on top of, in a branded residence scenario, the hotel services, so concierge, valet, housekeeping, a wide range of a la carte services for entertainment and lifestyle inside your apartment, outside your apartment, what you might be able to do with friends and relatives. You have the opportunity to put your apartment back in the rental pool to make some incremental returns on your investment if you only want to use it a few weeks a year. And Cheval also brings our global loyalty program, Cheval Discovery, into play, which you wouldn't have on a non-branded residential apartment, in that our guests that buy these apartments will automatically become elite tier in our loyalty program, and that gives them a wide range of benefits, rewards and recognitions at over 800 luxury hotels around the world. So we feel that is really sets apart a branded residence like Cheval Residences Dubai Islands from a standard non-branded traditional apartment offering.
What kinds of benefits do you get then from your loyalty program? What's the addition here?
So again, this is beyond the property itself, being part of the loyalty program. For Cheval initially, Cheval Discovery members get preferred discounts all over the world at our properties all year round. They also get the members get the possibility to earn Discovery Dollars, which has a financial value, which can be redeemed back at Cheval properties, but can also be redeemed at 800 hotels around the world, from the Maldives, Bali, the US, you name it. And also these elite tier members will also have benefits such as double upgrades when they check in, complimentary early check-in, complimentary late checkout. So just a really enriched experience when they stay at any Cheval property, but any of the Global Hotel Alliance properties around the world. Global Hotel Alliance is our partner loyalty scheme based in Dubai as well. But again, this is a luxury-only loyalty program with 40 wonderful brands, encompassing 800 properties around the world. So this is a very rich offering for owners of these properties that they wouldn't otherwise get.
Let me ask you a little bit about hospitality, because Cheval Collection has a strong reputation is probably a fair way to phrase it. But what do you need to do in the industry to translate that kind of service DNA into a long-term residential experience? What's the trick, I think I'm asking?
And I think that's why we feel branded residence is such a natural extension for Cheval, because today we have guests that stay 1 night, 2 nights, 1 year. We have guests that have stayed 5 years. So we operate both short stay licensed properties and long stay licensed properties. So we are in the residential game. We have been giving that luxury level of service for a long time. So for us, this is normal. This is our core business. We're not hotels that need to translate that service and offering into an apartment, sort of long living space, which is quite different. You know, it may from the outside it might seem similar, but it's quite different. For us, it's a natural extension. We're just going to carry on doing what we do so well, and the results that we get in terms of our guest satisfaction, net promoter scores, for the guests that stay on short stay, what they rate us at on Booking.com and Expedia, excellent scores, world-class satisfaction scores. So we will carry on doing that, and that is a perfect move into branded residences, which is probably why we're getting such good attraction on this new project, because the Cheval service standards are very well known.
So you've got great traction. It is an attractive offering. Who's the typical buyer or resident for this kind of product here in Dubai? Are you seeing more interest from end users, from investors, international second home buyers?
Yeah, I would say that the two major categories are that the end users, the people that are going to buy it and live there. And we're seeing a good demand from that segment, right, domestically and internationally, you know, from the region, but even further afield. But also there are the investors that will buy, maybe use the apartment for a few weeks a year, but generally give it back to Cheval to let out, to generate that incremental return. And we're seeing a lot of interest, again, domestically, because of the location of the property, the brand, the stunning design, and a lot of international appeal. So actually, it's quite wide-ranging in terms of the market we're intending to reach. And then again, for those guests or those owners that might put it back in the rental pool with us to rent out, we get guests from over 150 countries, various segments, short stay, long stay, corporate, entertainment, leisure guests. So it's very interesting about this model, and with our brand, how wide the appeal is, both in terms of buying apartments, but then also renting them out.
Nick, when we started talking 10, 15 minutes ago, you were very bullish over the whole concept, the branded residences concept, and that's understandable, of course. We're seeing more and more global hotel brands entering this kind of space, particularly in Dubai, particularly in this region. Do you think branded residences are going to become a core part of Dubai's residential landscape in the next few years?
I think it's here to stay. And why is that? What I was saying earlier about there are benefits for all three parties in branded residences set up. So, and there is no, if you look at the data in the market, both for Dubai, the UAE, and the region and worldwide, there is no let up, that this is double-digit growth and here to stay. There are a lot of properties in the pipeline already confirmed and due to open over the coming years. So I think it's going to be part of the landscape, a growing part of the landscape in Dubai, certainly for the medium term, if not for the long term.
So you mentioned a phrase just now. You talked about bounce back, the bounce back in Dubai, and we use a term bounce back ability to try and describe Dubai's attitude, if you like. And it's a very positive thing to kind of be part of. The thing is here, things move very, very quickly, and I'm interested. Your project completion is expected in 2029 for this particular development, and I'm interested how you future-proof a project because this is a very fast-moving market.
It is. And actually, just to comment on, given we trade two properties currently in the market, and obviously it's been a very challenging time for hospitality all around.
Yes.
With the model that we have, that we're a long stay model, we have people that live with us. So actually, we are open, we're trading, we're profitable, cash generative in a challenging time, and that shows that the market is, or the concept that we operate is resilient in tough markets. We have also seen that it actually outperforms in high markets as well when the market is doing well. So the model is quite resilient to external changes and dynamics in fast-moving markets, as you were saying. But we're not standing still. We have been around a long time, but we do recognize that there are still improvements that we can bring to what we do. We've been investing heavily in the back office of what we do in the business, and also launching with Global Hotel Alliance just coming up to a year ago was a big move for us to really step forward and add even more to our guest offering. So we're very happy about that. And again, the response has been phenomenal from our guests. We're way ahead of our plan for the loyalty program launch. We're very pleased with that. But what we have in the pipeline to stay current is we're planning to refresh our brand. We're planning a new website launch, a new booking engine, and an end-to-end guest experience portal, just to elevate the digital experience that we bring. The physical experience in terms of our properties and the service that we deliver is world-class, and we'll continue to keep that at that level. But we feel we have an opportunity to elevate our digital experience even further to keep up with the needs of our guests and keep up with the competition and stay ahead of the fast-moving market that Dubai certainly is.
Okay. You're not standing still. So how does this project fit into broader expansion plans across the Gulf? I know Saudi Arabia is very much, more than on the radar.
Yeah, absolutely. Yeah, we're very much on the growth curve, and both inside and outside the region. But within the region, we have two properties being constructed at the moment, both in Riyadh. Quite different, actually. One of the things about Cheval that I haven't mentioned is each of our properties is unique. So we're not a cookie cutter brand standards. You could be anywhere in the world and you're in the same building. We are absolutely the opposite to that. And there's a testament to that in the two projects we have in Riyadh. The first one we have, Cheval Ladun Living, is a beautiful glass tower that you can see behind me, being currently constructed. We're currently at the level 3, due to open next year. And that is very much closer to the financial district, so will attract a certain demographic of customers, and we're very excited about that launch coming up, and we're already in pre-opening for that, which is great. But we also recently signed in November last year our second property in Riyadh, Cheval Maison Suleymaniya, which is a totally different concept. It's low level, ground +3, whitewash, palm trees, exterior areas, very much in a slower part of town with great access to popular areas, but slower part of town and very much more residential, long-term villa style living. So this is good for us because that is what our guests want. They want choice, and they want different options that suit their lifestyle, suit the reason for their travel and their stay. So we have got those two publicly announced in Saudi Arabia, but we have quite a few under negotiation also in Saudi Arabia, in UAE and other markets in the Middle East, both for our traditional model of rental apartments, but also branded residences. And actually the most popular option at the moment is both on one property, some apartments to rent and some apartments to sell, because that seems to be the best mix for brands like us, for developers, and also for potential guests and owners.
Can we just consider the market for a moment, or market trends, really? The trends in global living patterns. What most influences design and service models at the moment?
I think from a design point of view, uniqueness is one of the things we're seeing as a trend, particularly in the luxury end of the market. People don't want the same thing. They want to have part of living is experiential. It's having the day-to-day experience, the time, the space to live, particularly in the luxury segment. And we feel our current properties, deliver well to that. The properties in the pipeline are absolutely stunning in terms of visual design, exterior and interior. But a lot of thought and care is put into the interior design, the space layouts, to give that sense of time and space. Because ultimately, what is luxury? What is it? And we feel that time and space is really part of that, and the ability to live life on your own terms. You're not told when you need to be at breakfast. You're not told when you need to be in and out of your apartment. You can be there for the long term and live life the way you want to live it. So that is the part of the ethos that goes into our interior design. And so far, so good in terms of the response we've had, particularly for our new projects coming online.
It's interesting that, because we talked to the general manager of the Nautilus, which is it's a private development in the Maldives. And we talked to him on, I think it was Wednesday morning. And his definition of luxury was pretty much exactly the same as yours there. And it was the ability to be able to live life on your own terms, to not have to turn up at breakfast at a certain time.
No, I think it's true, and that comes from research and talking to our guests and feedback we've had over time. And again, the benefit for Cheval Collection is that we've been in this game for over 40 years. So our guests are sometimes multi-generational. They came to stay with us in London as a child, and then as an adult, and then as a grandparent, bringing their multi-generational families along with them. And why is that? Why do they keep coming back to us? Because Cheval Collection is unique in offering that time and space. I think one of the other things that we do offer as a brand is discretion. We have a number of, we service the entertainment segment, for example. So film crews that are working on a 6-month shoot in a particular location, often the A-listers will come to stay with us, and they want privacy, they want discretion. So our designs for our buildings are often that the entrance is not at the front but at the back, and there are easy ways to move around the building from the rooms and the apartments to the car park without having to go into public areas. So that discretion is also part of VIP, A-listers, ultra high net worths, how they like to travel and how they like to live while they're away from home. And we very much bear that in mind with how we design and operate our buildings.
Sure. And I guess that trust, because it is ultimately trust, isn't it? That generates the return business, that long-term, multi-generational business.
It does. And we have guests that ask for the same apartment number every year. It's not just coming back to the city or to the property. It's I'm coming back with my family and I want that number of apartment. In fact, I would like the 4 apartments on that floor and to privatize that floor, so only my guests and my family can actually get out the lift on that floor. That's what we can offer, and that's what guests respond really, really well to.
Just a couple more questions, Brie. We've got a few minutes left, but how competitive how do you view the competition in Dubai? It's a better way to phrase this. For as an international hospitality brand, entering the residential real estate market, how do you perceive that from where you're sat right now?
Well, it's a busy market. There's lots going on. Again, as I said earlier, it is the global capital of branded residences. All sorts of brands are either operating or opening in the market. Hospitality brands, but also fashion brands, motor brands, all sorts. And it's a very, I think there's even football club brands. So there's a lot going on there. But that's because there is a lot of demand. And from what we've seen on already operating 2 properties, there is a lot of demand. It's very diverse, domestic, international, multiple different segments. So that's one of the reasons we're confident with our entry in branded residences in Dubai. But also that Cheval brings something a bit different. We're not a fashion brand. We're not a hotel brand that's sort of pivoting into a different model into long stay. This is what we do. This is what we've done for a long time. Guests and owners can trust our brand and do trust our brand. So we feel we actually bring something different even in a busy market like Dubai.
Okay, so this is your first project of this sort in the region. What would success look like for the project once it opens, once you've had, the breathing space, you're into 2030, for example?
Yeah, I mean, I guess the first step is to sell all the apartments, and so far so good on that front, and to open on track. So we're very confident about that. And in terms of opening properties in Dubai, we've already done that, so we're very confident about how we're going to do that. We are expecting a number of the owners to give the apartments back to us to rent out, sort of normal business for Cheval Collection, and we expect the demand for that location to be very strong. So we're very optimistic and confident about that opening in 2029. We'd love to have it sooner, but that's how it goes. We're building beautiful new properties.
Good morning, it's 10 a.m. and this is the news on Mira Business FM. These are the headlines. The Emirates Agriculture Conference and Exhibition 2026 has wrapped up successfully in Al Ain. The first or the 5-day event brought together farmers, businesses and experts from across the UAE. It focused on sustainability, food security and innovation. More than 50 experts took part in discussions alongside 200 Emirati farmers and dozens of companies and startups. Officials say the event highlighted the UAE's strong commitment to developing its agriculture and food sectors. Iran's Foreign Minister Abbas Araghchi held high-level talks in Muscat with Oman's Sultan Haytham bin Tariq. The discussions focused on regional cooperation and safe maritime movement. Talks also highlighted coordination among countries along the Strait of Hormuz. This is seen as key to ensuring secure shipping routes. Iran's Foreign Minister Araghchi said that neighboring countries remain a top priority, and he added that safe transit is important for both the region and the global economy. U.S. President Donald Trump says tensions with Iran may be nearing a turning point soon. He said continued military and economic pressure has weakened Tehran, and he also added that this could open the door to a possible resolution. U.S. President Donald Trump also pointed to divisions with Iran's leadership, and he said this could speed up any outcome. Russian President Vladimir Putin is set to meet with Iranian Foreign Minister Abbas Araghchi in Moscow today, according to Russian media. The talks come as Russia and Iran continue to strengthen ties. Both countries face Western sanctions, and officials say their meeting will focus on ceasefire efforts and the latest regional developments. That's the news for now. Follow more news on our website, mirabusiness.fm.
Mira Business FM.
This is the Morning Drive. A new Work from Park initiative is rolling out soon. So it's tech-enabled outdoor workspaces across the city here in Dubai, hopefully, over time. And it's going to blend productivity with green spaces. It's a real challenge to the traditional office model, and it's a move that comes as companies double down on the idea of flexibility in the workspace, and as cities as well compete to attract talent. Now, Omar Al-Maheri is the co-founder of Let's Work, and that's the platform partnering with Dubai municipality to power these smart environments. And he's here. Omar, it's good to meet you.
Nice to meet you too, Tim.
Good to have you here. So we're going to get down to breaking down the collaboration and what it means for the future of work in Dubai. But where did the idea come from, first of all?
Yeah, I mean, so we got a request to meet with the Dubai municipality. Okay. And it was just a very casual chat. They wanted to figure out what we do, and essentially we're a commercial real estate platform. Yeah. We work with co-working spaces, hotels, and cafes, and we basically enable them for individuals or teams to work out of. And they wanted to understand like what our scope of work can be. And the idea was, they said, we have this great public spaces, but can we, add that layer of work, remote work into them? And so the first idea came up, which was Barsha Pond Park. Right. They brought out a map and they said, okay, we found 3 locations that could potentially work for this. And this was in January, and there's construction going on today, so it's quite impressive.
It's happening.
It's
in other
happening.
words.
Yeah, it is happening.
I mean, it's one of those ideas. Did you sit there and think, well, look, I do co-working spaces, we do buildings, and we work on licensing, and we make sure that communications are there, and that's a fairly traditional model, a new but fairly traditional model. How does this work outside? Did you sort of think, is somebody pranking me here? Because it's a really unusual idea. It sort of blurs the line between leisure and work time, doesn't it? Because the outdoor space is a very different place to work. And I get that, these days it's perfectly normal to work in a coffee shop.
Of course.
So that's kind of a standard thing, as it is to work in a traditional office space. Is this something that people were asking for? Were people asking for more in terms of, I need to be outside of the office, but I don't want a coffee shop?
Yeah, I think the number one feedback we usually get from our members is more locations. So essentially, what we've aggregated a lot of data throughout the years, where you can see people's movements. We can see essentially where people want to be, and that's next to their homes, their schools, or any kind of activity. If it's the gym or it's some place you're going to meet up. So people are always looking for more of these little hubs that they can work out of. We offer that flexibility in terms of not having to sign up for one space specifically. And I think the very important thing about the park space is we in the UAE, obviously, malls have become kind of our community hubs, right? They're more like, let's say, a street in Europe. Parks, maybe not so much. So I think this is an initiative to basically push people to use those community hubs. And I think one way to bring a lot of people together throughout the day is to say, you know what, this could be your office for the day as well. Work has changed. And I think the Dubai government's super forward thinking is, let's activate these parks again. Let's not just have them as parks for kids to come.
That's kind of how it seems. It's getting more bang for your buck from the park, I suppose, from the government perspective. But I figure that's kind of clever, because if you're working in one of your spaces near the gym one day, you're in the park one day, you're near a mall the other day, near your child's school one day, you're more likely to go back to the park at the weekend because it's an environment that you're kind of used to. Yeah. It's an initiative that it works great for 7 or 8 months of the year. I have this kind of hanging over me, but the weather strikes me that could be a bit tricky in August.
So the MOU was signed with 3 parties, us, Dubai Municipality, and Amana Group. And they're the ones that built Dubai Design District and a lot of other spaces in the UAE. Right. And so they're actually showing a new technology that they're using there, which is I don't want to say like a porter cabin, but they're quite really high quality installations out there. Okay. And one of the main things that came into decision with, number one, the space and where it is we needed to keep it close to the parking. So the outdoors, the time you spend outdoors is a little is less. So you just walk to the space. Gotcha. Right. And then obviously it's going to be equipped with ACs and everything. So you'll still have that kind of I'm outside but inside feel, which I think people crave. I mean, you have plants here and stuff. I think that's what people look for. And when designing the space and when figuring out exactly how it should look, we did want to keep that kind of essence of this is a park and allow people to feel that. So I don't know if you've seen some of the renders, but it's all glass so that you can feel like you're still part of the park and you're still outdoors in nature, but maintaining that cool, at least it's
a hard thing to explain, but it's kind of like the outdoors indoors and the indoors outdoors.
Exactly, yes.
Kind of thing, isn't it?
Exactly.
It's best, have a look online, you'll find the renders there. Okay, so if the mercury's up, then you are air conditioned, but you're still kind of in the park. It makes sense. All right. So this is not just like Wi-Fi under a tree.
No, of course not. It's fully equipped. Yeah. We even have we plan to launch meeting rooms for anyone who wants to book them. Even offices for the day, so you can actually book an office for 1 day or for an hour through our platform. And I think that's the reason why Dubai Municipality decided to work with us. Is we've seen so many different different setups for workspaces. So we were able to understand what people really want and what people are looking for. And I think being so central in a big community, we kind of understand the niches that people are looking for. Whether it's, I just want to work for the day. in the space, or actually, you know what, I have a team offsite that I want to host in a meeting room.
Yeah.
And so why not in a park, somewhere a bit different than your traditional coffee shop, as you said, or your office, something a bit more, I guess, stimulating to the mind, where it's like, okay, we're out somewhere different. Let's come up with new ideas, and that's kind of the ethos of the space.
Okay. I love that you said how traditional it is to work from a coffee shop. How times have
Yeah,
changed.
nowadays,
but
yeah.
it is, isn't it?
Exactly.
But I can see how it could work. So if you had a meeting room in the park and you have like a breakout picnic, for example, and then you're back in the meeting room.
Yeah.
I can see that. There's a bit of a psychological shift, though, isn't there, I suppose, for a lot of people, the more traditional amongst us. You've spent years building the Let's Work platform for indoor co-working, really. So for you guys, there's a fundamental difference, that being inside in a very a more traditional space to a modular kind of pod at Barsha Pond Park. It's a different way to work.
Yeah, it's a new challenge. I think we're excited by it, and I think even from our own spaces, we do see a lot of like people who just crave that kind of, I just want to be outside all day. And so some of our spaces actually do have that. As you said, throughout the summer months, it's a bit hard to maintain. But I think people do look for alternative workspaces, not just your traditional. I mean, coffee shops are great, co-working spaces are great, but I think the mixture of different spaces in one space can make a really big difference for your workday. So, for example, me and my co-founder worked from this space called Naseb in El Barari.
Okay.
And it's beautiful. It's quite nestled out in quite far out from Dubai, let's say. But you can have your meetings downstairs, finish your workspace, and then upstairs they have a really nice rooftop where we went to have lunch.
Okay.
So I think that kind of like difference really gives your day a bit more of the, I guess, when we need to work on something a bit more creative, when we need to work on something a bit harder, it's nice to have that those different elements to really help you get through the day, let's say.
I was going to say, that the ability to kind of look out onto a vista, if you like, it kind of gets the creative juices flowing, doesn't it? It breaks up the monotony, I guess. How is you work, obviously you're a tech-enabled firm, clearly. How does the Let's Work app handle the booking flow? I mean, is it just a bolt on to your existing system, I guess?
Exactly, yes.
Yeah.
So like two ways. We'll obviously welcome our community with any credits they have, or if they want to buy a day pass or book for a meeting room or an office.
Right.
That will all be done through the Let's Work app or website.
Okay.
And then what we're building in this space is just an easy way, if you can imagine like a metro pass where you just tap in and the turnstile will open. That's kind of what we want to build. It should be a quick and easy flow to come and use this space throughout the day.
Okay. What does it cost for a Let's Work a pass? What kinds of, what ranges are we looking at?
So the minimum for like an individual who wants to have we call it 25 credits, which gets you access to let's say 4 spaces in a month, is about 120 dirhams. And then it can range up to, we have big corporate teams that use us and they buy thousands of credits that they can use.
Sure.
But also we do believe that, work is flexible. Flexibility is at the ethos of what we do at Let's Work. So we allow people to just browse and pick a day pass. So you can go work from, one of our most popular spaces is actually the Rove Hotels. You can work from one of those spaces and it's about 30 dirhams just for the day pass. And that gives you access to the space, tea, coffee, water, discount on food. And then you have the other one, like Naseb, that I was talking about, is about 120 dirhams for a day pass. So it ranges on the space.
Okay. And where do you think the Work from Park initiative is going to sit?
We definitely don't want to make it super expensive because it is for the community. And this is something we're discussing right now with the Dubai municipality.
Okay.
It will be around a range of, let's say, a mix of a co-working space and a hotel. I think that's kind of where we want to price it at to make it accessible for everyone.
And does that includes your communication, your Wi-Fi and everything else?
Yes, of course, access to the space. We're also going to have a coffee shop in there too to make sure that you stay, I guess, caffeinated and hydrated.
As long as you've got the priorities right here, then I'm with you. So when you're installing the first are they pods? Are you going to call them pods in the park? Or what's it gonna
Amana
be?
has their own technology and their own name that
Okay.
they're announcing with it. But essentially, they're like not pods, but if you've seen maybe I don't know what's a good comparison. If you've been to like big outdoor exhibitions or it's like it's a big installation, but it's more permanent because we've added power lines, we've added obviously the Wi-Fi connection. Everything needed to be fitted for the space. And the cool thing that they've done also is we've basically given the the upstairs is like a mezzanine area. Obviously, in the summer, it's not going to be used, but we hope in the cooler periods, it would be really great to host some events there, some meetups. And the whole point of this space is not just to be a workspace, but also we want to host different events, meetups, even let's say something for the Barsha community, since it's situated in their community. Maybe we can do stuff for that.
One of the things with this is the park aspect, and I mean that from the perspective of people that go to parks. And if you don't go to the parks in the UAE, in Dubai in particular, you don't realize how great the parks are. It's such a huge bonus, I think, for the environment, because there is so much work done on parks. Municipality do an amazing job, I think. How's demand at the moment? What's the reaction been like from people that you're talking to? Look, we're moving into this new area. What do you think? Are people like, oh, Mark, come on, you want me to go and sit in the park? Or are people like, no, that's a great idea?
I mean, I guess the press release went out yesterday, and we've had a lot of people coming in really excited to help work with us or excited to just see the space. We've had people from our community saying, oh, when can I book it? It's been really, really good. I think everyone, like you said, I think a lot of people don't really go to parks, and now this is a really great way for them to say, I'm going to come to the park and work from there. And I think a lot of people are just excited for any new space that we launch, any new space that we partner with. Everyone gets really excited. But this one, I feel like has just changed the dynamic. I think people are saying, okay, this is like a first for a lot of people. So let's see.
It is a first, isn't it? It was one of those things. I saw this and thought, I kind of did a double take and thought, working from the park. And all the jokes came to mind, and I'm thinking of, I love the idea of working for somebody and calling them from the park and saying, yo, I'm in the park. What are you doing in the park? I'm working for you. Currently at the moment, I've got myself set up, I've got my laptop. So the pilot is Barsha Pond Park, isn't it? That's the first one. If that goes according to plan, everything works, the uptake's great, people enjoy it. How many parks are you looking at by? Because that starts in May. Is that right? In theory, in May. What are we looking at by the end of the year? Let's say.
So it's interesting. During the conversation of Barsha Pond Park, we had, while signing the MOU, I mean, we've been to the Dubai Municipality's office quite often to basically do different workshops, work on different ideas, and they were already speaking about the next 2 locations. I can't announce them right now, but there's going to be a lot more coming. And it's not limited to parks, I think. I think they're looking at public spaces and seeing how to equip Dubai with these community hubs for people to work from. And I think it's really exciting because, like I said, January we started, already it's being built, and they're already looking at the next one. And I think that's like a big statement from the Dubai government. It's like we keep moving, we keep trying to find new things to do, and we're super excited. And let's see.
I mean, it's certainly that. This is moving at pace, isn't it? It's a model that I guess you could scale beyond Dubai. This is something that I can see this working across the GCC. I can see this working in all kinds of places.
Of course, yeah.
How do you think? I mean, you're talking about the government there and the speed the government works at, and how does this position or help to position Dubai in kind of global terms? Because if you're looking in on, I don't know, you're in London, New York, Paris, wherever you are, looking in thinking, they're all working in parks in Dubai. It's kind of a little bit nuts, but good nuts, if you know what I mean. How does it position Dubai globally in terms of attracting talent, digital talent, remote workers? We've got the remote work visa, for example, and it seems like a work from park network is kind of another product, if you like, that is is part of an attraction to international, the digital nomads that we're seeking to sort of bring in?
Yeah, I think so when we started Let's Work, there was only like maybe 2 or 3 co-working spaces. Fast forward to today, there's about, I would say, like 50, 60 co-working spaces. And so when we initially launched Let's Work, there weren't that many spaces we could partner with apart from F&B or hospitality venues.
Yeah.
And when we started partnering with co-working spaces, the ones that were opening up, we thought, the shift will easily push to those co-working spaces. Even the corporates that started using us, we assumed that they would use those co-working spaces. But what was super clear is people still want to work from cafes and hotels because everyone has their own kind of style of working from. And I think this park element for sure will add a bit more of an edge to what we have as an offering here in Dubai. I think you're completely right in saying, we're attracting the right type of talent. We're also helping the talent that's already here feel more comfortable, feel more flexible. I think remote working policies is something that is definitely needed. Even at Let's Work, we're hybrid. We work, 2-3 days out of our own spaces. And we meet our members that way. And I think that gives flexibility, not just here, but if you want to build a global brand, if you have a really good setup in terms of a hybrid workspace, that really changes a lot. So I think if you speak to a lot of tech teams, a lot of tech companies that have tech teams abroad, they'll tell you that most of their tech teams actually don't work together. So we ended up launching spaces in Pakistan for our teams to work together. And that really does make a big difference in the impact of your whole team. And I think doing that in Dubai as well could be really interesting to look at.
The flexibility kind of brings people together.
Exactly.
Just saying, yeah, okay. And that's the key, isn't it? The idea that you can work, I don't know, in a park one week, in an F&B location another week, in a coffee shop the next week. How much are you seeing companies formally kind of integrating spaces like your Let's Work spaces into their hybrid work policies? How much uptake have you seen?
So we've had, we've been pleasantly surprised post, I think, let's say 2 years after COVID. We actually built a product for this because we got a lot of requests for people looking to not only have the option to work from these different spaces. So let's assume a company has like 20 remote working days per year in their cycle. So what we've done is we've built a product for them to be able to say, you know what, in those 20 days, you can work wherever you want. We're going to give you an extra 20 days and you work from Let's Work spaces and you meet up in these spaces. So one of our core customers is actually Emirates NBD. They use us. We've just wrapped up a pilot with them. And what we realize also is they're not only looking for that, but they're looking for meeting spaces. They're looking for workshop spaces that are outside of the office. Instead of telling everyone, okay, come, let's meet at the HQ, the usual day-to-day. You know what? Here's a great offering. We have access to 1,000 different meeting rooms across the city. Why don't we just meet in these spaces? And another interesting one we piloted with was EANT, so it's Salat. And they wanted access to UAE. Very quickly, we saw there's some people using our spaces in Saudi, some in Egypt. And that for us was like, okay, we have spaces in countries that people actually do work out of or do want to work from. So I think that kind of forward thinking or that kind of activation of these spaces really gives that workforce the sense of pride, like, oh, my company is actually allowing me to work from these spaces. And then number two, for the spaces themselves, they have such a diverse range. So a co-working space typically will expect SMEs to come in, small boutique consultant firms. But now you have people from EAN, the NBD working besides, people who are starting their businesses, which I think is quite great. You can build that serendipity where...
Well, you can. It's a great environment to work from as
Exactly,
well.
yeah.
It spurs some unusual thinking as well. It's very forward thinking. But it's the freedom, it's the flexibility again, isn't it? To work how you want to work. And I suppose as well, if you're one of the larger corporates, there's a sense of empowerment if you work. You're trusted.
Of course, yeah.
Outside. What have you learned in the journey so far? I mean, obviously you're a tech firm in many ways in terms of data that you collect or insights that you're collecting from people that use and organisations that use your spaces. What have you learned, and how does that shape what you want to do, where you want to be?
We, like I said, we don't have an office ourselves, to be honest. We work from our spaces.
You really are nomadic, aren't you?
Yeah, we have to live our product. And the beauty of that is we get to meet our customers. We see who's using what spaces every day.
Yeah.
And that really gives us a sense of like an ear to the ground. And I think one thing that we've noticed is people who maybe don't have an office or don't have that kind of space that they can call their day-to-day office really love using our product so that they can feel like they're part of something as well.
Okay.
We have our top customer, maybe I won't mention his name, but he's been going to one of the Rove hotels every day for the last maybe 3 years. He's surpassed anyone's check-ins from all of our Let's Work members, even our own team.
No sick days, no nothing.
Nothing. I asked him. We met up with him a couple of weeks ago, and he said, yeah, this is it. My kid's school is there. This is what I love. I need to get out. I can't work from home.
Yeah.
And so I think what we've done is created that kind of sense of like, oh, I'm an entrepreneur. I'm doing my own thing, and the fact that we can give this also to teams and corporates, that feeling is a really powerful thing. And I think what we've learned is people want more spaces always. People want new spaces always. And I think that's kind of Dubai's, ethos as well. And what we always do every summer is we figure out where people are traveling to, and we try to expand into those countries as well, just so that they can continue using their membership.
It's fascinating. It is. So it starts next month. It's the Work from Park initiative. Omar Maheri is the co-founder of Let's Work, partnering with Dubai Municipality to, power the parks from a work perspective. It's been good to talk to you. I appreciate you coming in. Thank you.
Thank you so much, Tim.
Good to have you here. This is Mira Business FM.
Mira Business FM, Dubai's home of business radio.
Good morning, it's 10:30 a.m. and this is the news on Mira Business FM. These are the headlines. Iran's Foreign Minister Abbas Araghchi held high-level talks in Muscat with Oman's Sultan Haytham bin Tariq. They discussed the regional cooperation and safe maritime movement. Talks also highlighted coordination among countries along the Strait of Hormuz, and this is seen as the key to ensuring secure shipping routes. Iran's Foreign Minister Araghchi said neighboring countries remain a top priority. He added that safe transit is important for both the region and the global economy. U.S. President Donald Trump says tensions with Iran may be nearing a turning point. He said continued military and economic pressure has weakened Tehran. He also added that this could open the door to a possible resolution. U.S. President Donald Trump pointed to divisions within Iran's leadership, and he said this could speed up any outcome. Russian President Vladimir Putin is set to meet Iranian Foreign Minister Abbas Araghchi in Moscow today, according to Russian media. The talks come as Russia and Iran continue to strengthen ties. Both countries face Western sanctions, and officials say the meeting will focus on ceasefire efforts and the latest regional developments. Oil prices surged at the start of Asian trading today. Gains were more than 2%. Brent crude oil rose to about $107 per barrel, its highest level in weeks. WTI crude oil also climbed, reaching around $96 per barrel. In contrast, gold prices fell as the US dollar strengthened. Spot gold slipped by 0.3%, continuing last week's decline. Other metals like silver, platinum, and palladium also edged lower. And now, quick market and currency update. Bitcoin is trading at around 77,850 USD. And for those tracking remittances, 1 dirham equals about 25.66 Indian rupees, 75.82 Pakistani rupees, 33.40 Bangladeshi taka, 16.51 Philippine peso, 14.33 Egyptian pound. Meanwhile, 1 British pound equals 4.97 dirhams today. That's the news for now. Follow more news on our Telegram and WhatsApp. This is Mira Business FM.
Mira Business FM. The sound of success.
This is the Morning Drive. It's Mira Business FM. We spend a great deal of time here, or at least we have in particular over the last 50 days or so, considering the impact of the regional conflict, and from all kinds of angles as well. We've not, however, spoken to any chief financial officers for their view on how to navigate tough times, crisis times, until now. And I have to be very careful with the gentleman that's joining us now, because he signs the checks. So, Vipin Sangwan is the Chief Financial Officer of the Mira Group. It's good of you to come and see us, Vipin, because I know busy times at the moment, huh?
Exciting, I would say.
Yeah, well, I can see you smiling, so I take heart from that. Look, the uncertainty of the regional conflict that we're experiencing now, it's weighing on all business leaders, all entrepreneurs. Of course it is. When headlines about war or conflict dominate, the bottom line's kind of the last thing you want to look at for lots of people, because it's kind of scary as much as it's super important. So my first point would be the thing to do, the thing to be at the moment is pragmatic, to try and be calm, isn't it? Is that the place you start?
I think it's not only about the crisis when you need to be calm. I think especially in roles which are finance related or where you apply daily, the brain of the company, you anyways have to be calm. But yes, the moment the crisis is there, you have to be more calm because you have to make other people calm. The first thing you do to make anybody calm is, first you have to be calm and you have to give them the comfort that, okay, yeah, there is something, it's not normal, but yes, if you just come up with a problem that, okay, there's a problem, everybody will panic.
Yeah.
If you come with a solution that, yes, You have to be truthful that, okay, there is some problem, but you have a solution or at least a plan for that.
Yeah.
That makes things calmer.
It makes sense. I mean,
Yeah.
nobody enjoys uncertainty, and well, I would guess very few people enjoy uncertainty. But how do you deal with it? Is it something you can learn to deal with?
I would say it's definitely you can learn. I'll put it even more simple terms. It's like a muscle, First time when you face uncertainty, you are not that much prepared. You don't know how you have to react. But the more and more you go through these difficult times, which is very often, I mean, uncertainty is not something which is, a very, very unique thing which is happening to a particular event.
Sure.
It's a very regular thing. It happens every time. You may call it a different. It can be a financial crisis. It can be some conflict. It can be any other reason. So it's something which is keep on happening. How you learn out of that uncertainty is where things matters. It's like a muscle. Every time you work on it, it grows. So yes, definitely you learn. It's something which you have to learn, and I would say it's something where. Every time there's crisis, you come out stronger. The next time you're more prepared for, what you need to do. So out of say, first time you have 5 pointers, okay, these are the 5 points I have to do after that thing overs. Next time, at least you're prepared that 5, I know what I need to do. At least in the next time you learn 2 more.
So I mean, experience counts.
Yeah.
Okay. It's fun. Years ago, I would have a problem and I would just hope it went away. That was always my attitude. And then I kind of learned over time, amazingly, I matured, I think, that if I faced a problem, not only did the problem get solved, but I felt better as well. And it's an immediate thing. But I guess I'm looking at you oversee, 30 odd companies, I think, in the Mira Group.
Yeah.
That's a little bit more pressure than for most people.
You can say more pressure, but I would say it's the time to learn more, because the moment crisis happens, it's like when things are normal, you don't go too much detail in things which are not the most important things. But the moment something, which is off track, it's like, you're switching on the light in a very dark room and suddenly you realize, oh, there are so many things which are messy. Which you normally don't do because you're not focused on that room, and you're just more focused on the places where you're generating the most revenue or the profitable and all those things, because all other smaller things get taken care of with the other things. But these kind of thing happens, you effectively realize, okay, everything which is a little bit messy comes into the light. You focus on those as well. So I would say at this point of time, you get more time to spend on things which you're not focusing in the beginning because you thought it's not that critical, but it's been taken care by the other things which are doing good for us.
Okay, so let me ask you this: when the news broke 50 or so days ago of the conflict on February the 28th, lots of executives, and there was a real feeling, I think, of kind of wait and watch, because we didn't know what was going to happen. We still don't, but that was kind of the overall feeling, a kind of a holding pattern, right? As the CEO of a large group, what was the first thing? What was the first kind of financial lever that you pulled? What did you prioritize? Was it liquidity? Was it supply chain buffers? What was the first thing you did?
I would say, even before anything happens, if you're starting to plan or start to, think of these scenarios once, some crisis happens, you're already very late.
Okay.
You cannot do that once the uncertainty is there. If you're doing it that time, you're already very late and you're not up to the task. All these things, of course, you need to have these scenarios and plans even before this thing happens, because that's what you are here for. You have to have all the possible scenarios which you can think of. Of course, before crisis happens, it's all academic. Once things happen, then is the time when you realize all these were not academic. These are actually practical. Now you just need to filter out that, okay, I have 10 plans, out of which 5 which I have, this is the worst case, this is the best case, this is a medium case,
Which
which
is
one
the
I will
best
apply.
plan.
But
Right.
if you start planning those cases once uncertainty happens, then you're anyways out of the action.
Okay. But liquidity is key, isn't it?
It is key
Yeah.
in any given situation, especially in uncertainty, is the most important thing,
Mm.
because if that is not planned, you're anyways then it's a matter of time, when you'll be vanished out of the market.
Yeah. It's not just an asset, is it? It's like oxygen.
Yeah.
Really. Yeah. Okay. All right. A conflict like the one that we've been discussing, that we've been living through, inevitably it impacts imports, it impacts exports, logistics. How do you look at pivoting when the supply chain in just construction, for example, is under threat potentially?
I would say you have to be honest and clear, with all your communications that you do with your suppliers, whether it is I would say even to your internal people. You have to be honest, and the communication should be there. The more and more you try to run away from it, so that to avoid a short-term thing,
the more one I learned when I was a kid.
the more deep you're going into the trouble. So it's very, very important. Of course, it's not going to be easy. It's not going to be a good news for anyone in this kind of situation. But communication is the key. You have to be very, very open, because those are also guys who are under stress. It's not like you're the only one who's under stress or feeling all these things. Everybody's feeling. But it's important that we communicate with all our people, in advance, also, continuously. Like, this is what is happening.
Yeah.
Of course, everybody's facing the tough time. Let's agree on something which is practical, which we can do, and how you can help, because they are also there to do the business with you in long term. So they'll also try to help you to the extent possible. So I would say communication is very, very important in these situations.
I mean, relationships are really important things to have, aren't they? So I guess if you get to a point where you're an entrepreneur, you're a business owner, and you need to renegotiate terms, it's important how you treat, how you speak to your creditors, to your suppliers.
Yeah.
And if you do keep those kind of communication lines open, there's a great benefit in that, isn't there? If you need more flexible payment terms, for example, if things get difficult. And I guess you have to think that through as well.
Definitely.
Yeah.
I mean, that's what I'm saying. I mean, if you have to be very, very clear, you have to keep the communication line open rather than, just try to avoid the difficult times, because it's your character what, is defined how you handle these kind of situations, because all these uncertainties are something which, of course, it's an opportunity as well for everyone. But once you get out of it, your character gets defined, how you handle that situation at this point of time, even with your suppliers or customers, everybody, and that helps you to build the long-term relation that is anyways required for any sustainable business.
So the things that hurt make a stronger kind of attitude. Okay.
Yeah.
I guess risk models for this year were written a while ago, I'm guessing, at least. And you kind of alluded to this, but I'm also guessing that the risk models that were written previously had to change, and they had to change at speed, at hyperspeed probably. How do you recalculate risk appetite when the external environment is changing by the hour? I mean, it's changing constantly. How do you do that?
Before, in normal situation, you prepare, say, 10 scenarios, 10 different risk models, keep on working. The moment this thing happens, you have to be very, very focused. You cannot keep a very open-winded, scope. You have to be very clear only with three things. Okay. What is the bottom where, if your, say, revenue goes down by, say, 90%,
okay,
what are you going to do?
Yeah.
Second is, what is the minimum level of cost that you need to have to survive whatever you need to survive with that 80 or 90% cut in the revenue? And what are the triggers? These three things trigger when I say, what will happen, what can lead to the revenue going down from, say, the existing ones to 90%. At what point of time I need to take what decision? These are my triggers.
Okay.
So these are the only three things what you need to focus on rather than the broad scope of 1,000 scenarios what you built before this thing happened. Of course, when you have luxury of time, you can keep on modeling, or if this goes this, I'll do that. But ultimately, when this thing happens, you need to be very, very focused. What are the key three things for you? What is your bottom? How you'll manage the minimum thing, what you need to manage with that bottom? And what are the triggers that suppose you have plan A, plan B, plan C? When you move from plan A to plan B, what is the trigger? What is your trigger when you think you already reached plan B and still it's not working? What is your trigger to reach to plan C? Okay. So you keep it very simple. Once these things happen, you get out of that entire simulations of 1,000 worksheets and you come down to basics. Okay, this is my bottom. This is my minimum survival thing, and these are my triggers that I'll activate. If this thing happens.
Okay, and you hope that you never get to plan D. That's when you put your head in the sand. What about people? Because financial reports are often they're kind of cold, hard data, aren't they? But in a crisis, teams become anxious, as does management. Employees are reading the same news. Investors are getting nervous. How do you manage that communication? How do you present a cautious financial outlook to the board and staff without any sense of panic, with a sense of calm?
Bad news is not a bad news if you give with some solution.
Okay.
It's bad news if you're not providing any solution and you're just being a messenger and telling, oh, something bad has happened. We are looking at, we are monitoring it, we'll see how it improves. Then it creates panic.
And if you leave it hanging like that?
Then it creates panic.
Okay.
Then it creates chaos. Then people are like, if the leadership is not clear, everybody knows there is panic.
Yeah.
But what they are looking up to you is how you plan to get out of it. Or at least what is your plan? Nobody knows whether we'll be able to execute that plan perfectly, but at least I have plan A, plan B, plan C. So communication, where you deliver the situation. Okay, this is the situation. You have to be very, very transparent. You cannot just hide out, oh, something happened, I'm not communicating. Then it becomes a little bit more difficult. So the early you give the communication and give it with very, very certainty that, okay, there is a situation. We have plan A, plan B, and, we'll try to deliver that.
Yeah.
And of course, you have to be, expecting, at that point of time to your people that, they'll also support you to execute that plan. Then it turns things up, and you motivate people effectively. Once you give it, with a plan, they'll try to deliver and help you to execute that plan.
It's a very, very intricate job to do. In tough times, there's more pressure, I guess, to cut costs. That's one thing we know. How do you, as a CEO, distinguish between...
I'll correct you, I'm the CFO.
I was miles away there. As the CFO, I even knew that. How do you distinguish between frivolous spending and vital investment that, really contributes to company growth? I know you can't give me specific examples. I'm not looking for that. But is there one thing or one area, perhaps, that you would absolutely refuse to cut, even when margins really tighten? Broadly speaking, I'm not looking to read the balance sheet, nor would I be able to. But you know what I mean.
No, I'll also not get into the jargons and all those stuff of the financial. I'll keep it very, very simple so that everybody understand it very, very clearly. See, when you think of cutting cost, of course, in uncertainty, that is the only thing which is effectively in your control. Yeah. Because, when you cannot do anything about your revenues, the only other area which you can control is the cost. So that's the key decision what you have to make on a daily basis. In my view, you have to be thinking about before, going on the numbers, what value that cost adds in long term. Right. I can have a cost which is the highest in my entire P&L, and I can say, oh, let's cut this and we'll save around, say, 50% of my cost. But that 50% which I'm going to cut, how much value that cost is going to add, not in say 2 months, but in say 1 year, 2 year. If I manage that after 6 months, will that be giving me back what I've lost, say 2 times, 3 times? Then I'll not think of that cost to be cut.
Okay.
So this is the approach which I would, or in my view, everybody should take. That instead of just looking at the number of that particular item, you have to see what value it's going to add in longer term, or may say in a medium term, if I'll be able to survive. Of course, you need to have plan whether you'll be survive, or it's the minimum thing that you need to have, whether you can reduce it from say from 50 to say 40%, 30%. But yes, it's not only the number which can decide whether it has to be cut, or how much value it is, or how much you're going to save in a shorter period of time. It's the long-term value which you have to think of. If I'm losing say 5 million every month because of one particular thing, but I believe that after 6 months, that thing will get you say 2 times or 3 times of what you actually spent. I'll keep incurring that cost if I'm able to survive. Of course, I need to find different sources where I'll be able to fund those, and of course that has to be done even before this thing happens.
No, that makes sense. I mean, it's not just a question of faith, is it? It's understanding. We all know what things cost, but you would question how many of us really get the value of the things that we spend money on, I suppose. You alluded to this as well earlier. You mentioned the opportunities that perhaps arise, and I guess it's really difficult to think about growing at a time like this. But there are opportunities around, aren't there?
Opportunities is the only inevitable thing which happens in uncertainty. That's the thing which in these times is where everything changes. You have the opportunity of getting a market share. You have the opportunity of getting in a particular line of business which you were thinking they're already overcrowded. So these times are the ones where actually things happen. This is where the businesses are actually made, or where you make a fortune. Of course, it's not same for everyone, because if you're making a fortune, somebody is losing it. Sure. So it's where the redistribution of resources, money happens. In normal times, it's very difficult to shift from one particular market share, say by more than 1-2%. But these are the times when it totally shifts from say 2% to 10%, 15%, because bigger, larger businesses, then they're something which they were not focusing on. Now somebody who has the will and the resources will focus on those things. So these are the times when you actually get the opportunity to build a fortune. That's my strong belief.
These are times when you really need to use that focus. Do you think crisis reveals weaknesses, potential weaknesses in your business model? And you kind of said this actually when we started talking. Maybe you're a little bit busy previously, and you can kind of see where the fluffy stuff is, and the stuff that isn't really working, but it's kind of allowed to happen.
Yeah, as I said, these are the times when actually things come out. Of course, it's not like you were not aware, but you were busy in building things which were valuing more, and some things, of course, everything is important, but you have to think of from the overall value it adds to the for financial terms to my top line and my bottom line. So if something is not that material, at least for the financial numbers, things are going on, it's fine, it's good to have. Yeah. But then something suddenly happens, then you go from good to have to must have.
Right.
Then, as I said, you just switch on the light in a dark room suddenly after 2 years, and you realize, oh, there was so many stuff which I knew was there, but I was focused more on the other areas of the house. But at this point of time, you get into each and everything, and you realize, oh, okay, is it actually making sense? I was ignoring it, not because I wanted to, but it was not making much of difference, because there are so many other good things which we were doing. But suddenly now we have to generate value, or at least get out that value from each and everything what we're doing.
It's a time to get forensic, isn't it? It is. We're really short on time. We've got to go to the news, but just briefly, final question for you, Vipin. For a small business owner or an entrepreneur listening to this, maybe watching this, and they feel a bit overwhelmed, what advice would you put forward? What would you offer?
First of all, I would say they have to feel that it's not only them who are overwhelmed. It's not something, they have to feel that they have done something bad in terms of decision making. It's the same feeling with everyone. Whomsoever is in that category or that segment is feeling that heat. They need to focus on something which they can manage even at a smaller scale. They might be doing 5 things. If they have to survive, they have to think of, say, out of 5, if I do 1 or 2 for now, will I be able to survive in longer term? And of course, they need to have very, very clear discussion or communication with all their suppliers and vendors. Because if you communicate, you will at least try to find a solution. If you don't, in 1 or 2 months, you'll break that relation. And for them, it's very, very critical to have those relationships both with their customers and their suppliers. Otherwise, their business is difficult to survive.
I appreciate you putting it so simply today as well. There was almost no jargon in there whatsoever. If there was, it was me using the jargon. Navigating the ledger in times of crisis, a pragmatic approach. Vipin Samwan is the Chief Financial Officer of the Mira Group. Thank you for joining us.
Thank you.
Appreciate talking to you. This is Mira Business FM.
Good morning, it's 11 a.m. and this is the news on Mira Business FM. These are the headlines. Dubai is upgrading its road network using artificial intelligence and big data. The new system helps monitor road conditions in real time. It works without disrupting traffic. Officials say the Emirate has achieved a road quality score of nearly 97%. Advanced tools detect cracks and measure road smoothness, and this allows maintenance to be planned early. The approach has improved safety and traffic flow, and it has also raised driving comfort to around 89%. The Emirates Agriculture Conference and Exhibition 2026 has wrapped up successfully in Al Ain. The 5-day event brought together farmers, businesses, and experts from across the UAE. It focused on sustainability, food security, and innovation. More than 50 experts took part in discussions alongside 200 Emirati farmers and dozens of companies and startups. Officials say the event highlights the UAE's strong commitment to developing its agriculture, and food sectors. Iran's Foreign Minister Abbas Araghchi held high-level talks in Muscat with Oman's Sultan Haytham bin Tariq. The discussions focused on regional cooperation and safe maritime movement. Their talks also highlighted coordination among countries along the Strait of Hormuz, and this is seen as key to ensuring secure shipping routes. U.S. President Donald Trump says tensions with Iran may be nearing a turning point soon. He said continued military and economic pressure has weakened Tehran, and he added this could open the door to a possible resolution. U.S. President Donald Trump also pointed to divisions within Iran's leadership, and he said this could speed up any outcome. Russian President Vladimir Putin is set to meet Iranian Foreign Minister Abbas Araghchi in Moscow today, according to Russian media. The talks come as Russia and Iran continue to strengthen ties. Both countries face Western sanctions, and officials say their meeting will focus on ceasefire efforts and the latest regional developments. That's the news for now. Follow more news on our Telegram and WhatsApp. This is Mira Business FM.
Mira Business FM, Dubai's home of business radio.
It's the morning drive. It is Mira Business FM with me, Tim Elliott. A quick reminder to subscribe or wherever you're joining us from. Next up, momentum is building in camel racing, and it says the Saudi camel racing team has secured its best ever finish with a podium result in Oman. We're going to talk now to Omar Al Maina, who has ditched comfy office chairs, never-ending business meetings, to dive into a camel quest adventure. Omar, it's good to have you on the show.
Thank you. Thank you so much for having us.
Do you know, I want to talk about the milestone with you, the debut of your Star Camel and what comes next. So I guess let's start there, really. Congratulations. You kind of announced your arrival on the regional stage. It's a big statement. It's a big deal, a podium finish. Just paint a picture for us, if you would, Omar, about what, what turned out to be a really historic day for your team.
Oman was Oman. Obviously, we got a podium finish there of second. We just finished in Qatar as well.
All right.
We got second as well. So 2 races on the bounce with podium finishes, which is a good feeling. Finally.
Yeah. It's been a while. I mean, the thing is, we're talking to you. This is something really different for us. I don't remember doing a camel racing interview, certainly not in the recent past. But tell us a little bit about your story, because normally I know you do this with a childhood friend, Safwan, who's not with us today. But just fill in the background gaps, if you would.
Sure. So for me personally, I come from a background of finance and marketing,
right,
from the US. That's my background, and I used to work for banks like Citibank and HSBC back in the day. Yeah, but then I left and ventured on my own, working in a lot of different places with my own business. Some did well, some didn't, which is the nature of the game. Then COVID hit, and then I met up with Safwan, my childhood friend from 20 plus years.
Yeah.
I feel old now.
Yeah, join the club.
Well, so he's been a hotelier for his whole life, and in 2020 we decided to go into the camel business.
But this,
And,
see, that's I don't mean to butt in there, but that's okay. We decided to go into the camel business. It's not a phrase I hear every day, because you two have kind of completely left your sort of corporate lives behind, haven't you? Your camel racing and filmmaking and generating content. This is now what you do.
Yeah, this is 100% what we do. We left everything behind, which for our families and people around us didn't make sense. And sometimes as you run the business, sometimes it doesn't make sense to you either, right? Because things don't materialize as quickly as you think they are. But sometimes you get it's not so much the results, but it's the magnitude of that you're hopefully going onto the right path. These finishes are more that than the finish itself. That some of the hard work that's been put forth, or some of the sacrifices that have been done by us, the fruition is these moments. So it gives you further push and belief that this is inshallah the right track.
Well, it's interesting that. So the races that you're involved with now, they're just part of another larger race, I suppose, aren't they? Another part of the journey. Is there? I mean, I honestly know very little about camel racing. I'll be completely open with you. Is there a good living in camel racing? Is there great prize money? How does this function as a business for you two guys?
Yeah. So basically, in camel racing, the money usually comes from winning races, right? So some of these races that in Qatar that we raced in our age groups, the first prize was around maybe 2 million Qatari riyals, 1.5 for second, and you go down to fifth. So that's big. That's big money in any. In any one moment for any business. And then sometimes there's also a purchase price where the royal families of these countries will buy the camel. So for the first place, again, we're talking about million plus Qatari riyals. So it is lucrative, but it's not easy. I guess to get there or be in those positions, right? Because we were racing against 85 camels in one race, 45 camels in another one. So there's a lot of competition. So it's not easy, but the prize money is definitely worth it.
Okay, so I mean, I guess we should talk about the athlete of the hour, shouldn't we? Really,
Yes.
the athlete of the track, really, and that's Hajma. So Oman was the debut. So I guess Qatar's the second race.
Yes.
But you've unearthed a star.
Well, she was. I mean, she before she came on board. She did really well in Saudi, in the Kings competition. So we knew the pedigree. But again, it's kind of like a football player, right? Having a good season. So one good season, you're still taking a risk on one good season.
Sure.
So this was one good result, and but you know, in the operations team and SAF and the trainer and I looked at many different things like pedigree, past results, training methods, how well the camel was taken care of, which was really good. Most of the trainers and us especially take very good care of the camels. So all of that made sense, and then obviously you have to have a bit of guts to pull the trigger and make it happen.
And it's worked out pretty well for you. What is it about Hajma that stands out from other camels in the races that you've been involved with so far?
Well, there's a phrase in Arabic where you call a camel sabug, which means a racer. So she has that gene where she's obviously quick. Mashallah, she's got stamina, and I think the biggest thing about her is she's got a will, right? So once she's in the middle of the pack, around 10th, 11th, and we're approaching the final, let's say 1.5 kilometers, she will go for it.
Right.
So so she will be amongst the first four. So she's got that in her mind. So that's a quality that's rare. That's a true athlete's quality.
That's the inimitable quality that all athletes are looking for, I suppose, that you hope you can find.
Yes.
Well, what goes into identifying and acquiring a top tier racing camel?
I mean, there's many ways, I guess, you could look at it, and you could look at it as in other sports, and the philosophy could be, football teams sometimes grow within. They identify players early, they develop them, and then they sell them off, and then obviously some clubs buy the ready product. For us, I think it's a mix where we have. Some of our team we bought young 2 years ago, and I think next year they come into fruition, and that was somewhat of a strategy to test out. And then we have others where we purchase not where they're at the top, they're in the middle, and you know what you're getting, but the ceiling is still higher. And this was Hajma and some other camels. So for us, it's a mix. And we're still trying to find the balance of what is much more successful, and I think time will tell.
Talk me through your training routines. I'm fascinated by this. I really am. I'm learning with you. This is a very traditional sport, isn't it? It's very particular to the region, of course. But you're bringing in, I suppose, kind of modern performance strategies as well. So talk me through your kind of training routines.
So I mean, the training. I mean, the original training is about a lot of it is about communication between the trainer and the camel, because there's a kind of a walkie-talkie and a speaker on the back of the camel between the trainer. So there's certain prompts that they talk about, right? And when they want them to go faster, if they don't say anything, they're just going at the same speed. When to push, when to leave it, and so that a lot of that is in the training. And then they also train is because it's a longer distance. Minimum is 4 kilometers. Then we go up to 5, 6, 7. So sometimes the strategy is, and it depends on the athlete, the camel. Some camels can hold the first or the leading positions for the whole race, and that comes down to sometimes training, sometimes genetics, and the will of the camel. And sometimes it's, holding mid positions, and within the last 1.5 kilometers, you're able to push them because you've conserved the stamina in the first 2-3 kilometers, and then you really push them in the last 1.5-2 kilometers. so our secret sauce is in the middle. Again, some of them can hold the position. Some of them, Hajma usually comes from behind, and that's what her name means, attack. Hajma. So she comes from behind a bit to take that. And that's the traditional way. In the modern, what we're trying to introduce is like an athlete. You've got heart monitoring. When they, what is the best speed? What is their heart rate at different speeds, different stages in the races? Obviously, we do a lot of blood work. What does that mean for the camel? That helps with nutrition. So these are kind of a little bit the more modern ways that we're trying to introduce. It'd be great if we'd get a whoop to attach to the camel and see sleeping patterns and, and all of that. but maybe that's for the future a bit.
Well, I would guess people are scrambling to make smart devices for all kinds of creatures. But I mean, it's really interesting. The point is as well that the welfare of the animal is so important to you.
Yes, 100%. And I tell this and anyone that visits our place can see that these camels are probably maybe more well taken care of, even better than me personally. So no, anything in the ingredients, anything in the food, the water, the place, it's top. And we never risk with an injury. Never. One of our best races got injured beginning of the season, and we decided to keep her out for the entirety of the season. It wasn't a tough decision, but obviously you're less one athlete. But blessing in disguise, and then we had to bring in Hajma, which worked out well.
It
You
certainly
never
has.
know sometimes.
It has so far, for sure. Do you know what I've noticed a couple of times is you're talking about her. So female camels is
Female.
Are female camels are racing camels all
Better.
female? Or
No,
No.
there are males and
Right.
there are females. Throughout our history as a team, we've had one male,
Okay.
and the rest are females. I think we prefer females because if they do stay with us for the longer term, there's always the breeding angle
Okay.
for females. So we prefer, even the temperament's a bit better for females.
Yeah, that's not the greatest of surprises. Let me. I'm interested in the racing. You talked there about having like a walkie-talkie system. Like there's like
Yes.
a robotic system. So it's literally when the camel is racing, the trainer is issuing kind of demands. Go faster. Is that what happens?
Yeah. So obviously you've got the track, and then next to it cars.
Yes.
Right. It's like a mini Formula One, right? Because everyone's
I've
even
seen
in the
it.
cars. You're jockey. Yeah.
Yeah.
I'm braced always for my life in those. I need a helmet for those moments. I've decided, to be honest. But yeah, he's always in the front. Sometimes they go up in the from the middle of the car, and it's kind of like things, small prompts like shh.
Right.
Or if you're getting it's more louder, and you could see everyone jockeying for position. So there's a lot of communication, and that's these prompts are, a lot of it is in the training, of what these communication mean. So yeah, it's great that there's technology involved, and we're looking at how do we, if there's an area or a mini space where you could advance the technology in communication between the trainer and the camel, that's an area of exploration, let's say.
Okay. Well, we've mentioned how long camel race has been popular in the Gulf region, but it is evolving. It's modernizing at a rate, isn't it? Technology, training,
Yes.
breeding standards, as you pointed to, are all rising rapidly. How do you see the future of the sport? What does it look like, Omar?
I think our aim, and and we're doing a very small part. The federations in the Gulf are doing an amazing job all over the Gulf, and we're just doing a small part in terms of being a team. Hopefully bringing on our own sponsors. Hopefully, marketing for the sport, and trying to bring in more audiences to it. And I think if we can get to where horse racing is today, that would be a very good milestone, and I hope we could surpass that. It's not an easy task whatsoever, but the elements of having an exciting sport are there. We already have a big kind of market and fan base, and we want to expand the fan base. Partnering up with Paul Pogba all obviously helps with the global, global narrative. So that's the aim, really.
Okay. What about next steps for the team? I mean, you've got a couple of podium finishes now, so that's a launch pad. So what's the next big thing for the team, and how are you going to build on the momentum from Oman and from Qatar?
Well, I mean, there's one in Abu Dhabi in Al Wathba. It's a big race, the finale of Al Wathba. So we're gearing up. To hopefully win there, and participate, and at the minimum compete. So everything is now focused on that. And I think with Al Habub is obviously you've got the track, and the core element is obviously camel racing. But another part of it is, content and media, and how do we, connect camels with and camel racing with mainstream, and how do we create cool content that helps, in a way, educate, but in the same time, bring on board new and fresh, people that would love to get into the world of camels. So Al Habub is kind of like that. It's, if you look at Wrexham, for instance, that's maybe a little bit of a blueprint.
Okay. So is that something that you're kind of considering, that kind of start? I mean, the Wrexham story is an incredible story in sporting terms. Forget the entertainment side of that for a moment.
Yeah.
As a sporting spectacle, something to be involved with, it's remarkable. And I can see the parallels, because you can very easily put forward a case that camel racing is one hell of a spectacle. It's an amazing thing to watch.
Yes. I mean, you said it yourself. Yes, it is, and I think the elements are there of our backstory. Having been on Netflix, having an amazing friend and shareholder and Paul with us. And the team, we've been through a lot of struggles. The podium is just a nice kind of milestone within a bigger journey that hopefully we continue on, which will have ups and downs as well. But yeah, something like Wrexham, Blueprint, Drives to Survive. I think that the foundations are there.
They seem to be. What got Paul Pogba interested? An internationally renowned footballer. How did that connection come about?
When we met him, he knows a lot about the region. Obviously, he comes a lot, being also a Muslim. The conversation was very, very natural. He was very interested. He had already a background, a bit of what camel racing is. Right. We connected, all three of us, straight away. And he was very excited about the project, and we were really happy to have him on board. And it's been a really nice story, and I would say a brotherhood ever since.
It's a fascinating story. Perhaps a global camel racing league. That could be a vision. Next, who knows? Omar Al Maina. Omar, thanks very much for sharing the journey today. Congratulations again on the podium finishes. Long may they continue. And thanks for joining us.
Thank you for having us, and have a great day and year.
I appreciate it. This is Mira Business FM.
Mira Business FM. The sound of success.
Mira Business FM, it's the morning drive with me, Tim Elliott. So what today's economy, global economy, means for your money, that is next. From interest rates to inflation to global uncertainty, what do headlines about the economy actually mean for your money? If you could read between the lines, it can help. With me is somebody who manages money across borders, works closely with business leaders to turn complex global trends into practical financial decisions. Payal Trehan is a partner and senior investment strategist with the Michelle Carby practice. Payal, it's nice to meet you.
Great to be here, Tim. Thank you for having me.
You're very welcome. It's good to have you here. Makes a change from Michelle. Don't tell her I told you that. But anyway, we'll go from there. Look, keep it on the down low. When people hear those two words, global economy, particularly at a time like where we are now at this point in history, it can feel a little bit overwhelming. There's a lot to take in. There's so much to think about. Taking into account where we are now, I'm going to ask you a really difficult question to start with, and I apologize, so settle in. What's the one thing professionals should understand right now when somebody says to them, well, the global economy, ... Do you think?
Well, that's a packed one.
It is, isn't it?
I think, as complex as the question is, the answer is pretty basic, which is when you're talking about global economy, I think the most important thing to understand is it's the interconnectedness between you and someone else, between markets and supply chains. So as much as you want to complexify the answer, it's actually pretty basic. It's about how do events in one part of the world affect me today where I am. And I think what's kind of created a little bit more complexity in our world today is the fact that information is just so accessible to us.
It really is, yeah.
You got your smartphone, you're walking pretty much from your apartment down to your car, and you know what's happened. Right? So I think that instant gratification, which is a great thing, by the way, allows you to just kind of understand. Before you've kind of walked into the doors of your office, you know, oh my God, this has happened, and it's unfolding, it's panic alert. Situations like these always happened in the past. Global uncertainty isn't something that's a new phenomenon today. It's always been there. What's new is today we just hear about it faster, more effectively, and that's a good thing, a bad thing. It's certainly a stressful thing.
Well, it is. And I mean, it's delivered directly to your phone now.
Yeah.
So it's like being slapped around the face with a wet fish. Here it is, and here's where we are. So it's almost as though everything is amped up. It's no better or worse than it was. You could argue that maybe at the moment the world is slightly less predictable because President Trump is an unpredictable person, whatever you think of him. But I suppose it's kind of the new normal, really.
It's, you know what, again, it kind of goes back to that. Uncertainty is not new. What is new is exactly what you've said. It's the pace and the magnitude at which things are evolving. I mean, think about it this way, right? You live in a world which is pre-COVID and post-COVID. And post-COVID, the amount of things that have happened just feel like, gosh, this should have been a decade. But it's not. It's 5 years. And when you think about it, you had the Russia-Ukraine situation, you had the Middle East tension, you've now hit with global tariffs all around, and then you've kind of just woken up and you've just kind of, wiped your eyes from the New Year's this year, and you've got a Venezuela situation already, and now you've got a brewing Greenland situation. So all of these things, it turns the volume up just a little bit more than, what's a bit manageable. And I think that perhaps is probably what does feel a bit overwhelming is how do I navigate around stuff that's just happening far too frequently? But I also think while we're talking about, the global uncertainty side of things, I think what probably has been the single most challenging and constructive factor in probably the last 3 years is AI. right? And it's no longer just thinking about a world where it's like, how do I circumvent around the geopolitical issues? But it's also around, how do I integrate this mammoth of a technology to either constructively become a part of my workforce, or is it going to replace me? And how do I navigate and circumvent around that? So you can definitely see how that uncertainty is amped up in individuals, in businesses, decision makers, investors. It's all around.
Well, this is the thing, isn't it? We're in this technology age, and we have this new tech coming. Once the AI moment is over, we will get the quantum moment, and then whatever we get after that. So there's always something to think about. But the issue with all of this is, with this uncertainty, is what it means for a lot of people is either this is just too hard, and you kind of put your personal finances on a back burner, I think, because it's, and you maybe take the safe option, or maybe don't explore the avenues that you could explore. And I think that's a very real feeling with people, that, you know, I don't know how to do it, it's very technical, and what's crypto, and how does Bitcoin work, and what does it all mean, and all of that. And I'm in with that mix of people as well, because I find it as overwhelming as anybody. So what's happening globally, that kind of omnipresent uncertainty of this overload of information, really can have an adverse effect on personal finances, on the way people invest.
It can, but it can also do the opposite. So you have, the market is kind of, or the investor pool is a little bit kind of split up on this, right? Where on one side you're looking at this and you're thinking, yeah, I don't like it. It scares me a little bit, the uncertainty of what's happening. There's another side of the market that's looking at this and saying, oh, well, hang on a minute, there might be opportunities over here. There might be areas that, I'd like to explore further over here. So if we're looking at geopolitical tensions, are there certain areas that might do well? I mean, gold today has hit 5,000. You have a lot of investors that probably park their money over there and make money out of that uncertainty. So uncertainty for the masses, and I'll say this, in the nicest possible way, is for the masses that are unaware of what uncertainty can bring to you in terms of opportunities. The natural response is, let me run for the hills. Let me kind of put my head down and kind of ignore it. But that's where the educated professionals come in. And that's where it's so important for you to buddy up with an advisor that you trust, get a professional to look at your portfolio and help navigate you through these times in a constructive way, in a way that's palatable for you. But I've said this, I said this in the global financial crisis as well, is never look at something in a very closed and zoom-in view. When you're looking at personal financial decisions or the markets, probably the best advice I can give anyone is take a breath, step back, zoom out, and look at things in a larger scale picture. The markets will probably be down for 1 or 2 years, but it's very unlikely that majority of the market will stay underwater for 5 years. Virtually doesn't happen. So if you've done your groundwork right, this is a great opportunity.
This is the mindset you have to kind of accept, isn't it? That when you think everything's gone crazy and the markets are tanking, that there's an opportunity there. And
Always.
To be able to, step back and hopefully be dispassionate about it, to not be emotional about it. That's where you have to get to, I think. And I think that's the difference between financial professionals and bods like me, to be honest. But why should business professionals or just working people really care about economic events outside of their home country? Why do you need to take that wider view?
Because I think it really helps in decision making all over. I mean, if you think about, right from your grassroots level decisions, interest rates. Interest rates affect you because it helps you decide, is this the right time for me to step into the property market? Is this the right time for me to think about a mortgage? Is it going to get a bit cheaper? Inflation, such an important fact and so underrated, because it helps you understand, is this particularly the right time for me to be spending money or saving money? Yeah. If the prices of things are going up, am I wiser kind of maybe amping up my investment portfolio a bit more and lowering down my spending portfolio? Can those Gucci shoes wait, for the next bonus check? And maybe I'll buy some NVIDIA today instead. Those are decisions that, it's very helpful to make. But it's also about, it's understanding specifically, and I say this in Dubai a lot, is majority of the people that live and work here are expats. And a lot of times people, when I sit with clients and I ask about, are you sending money back home? And the answer is, yeah, I support my family back home in some way or the other. Great. Have you got a currency broker? No, I haven't. Well, that's an important thing to have because you're living here. Sure, you don't think about it. The dirham's pegged to the dollar, but the dirham may not be pegged to your home currency, So at some point, it's important to think about these decisions because compounded, they could mean a lot over your 20, 25-year working life. Sure, as an isolated event, as a one-off, maybe nothing. But 20, 25 years of sending money home at a more expensive currency rate, it could amount to something.
Yeah, it makes a good point, to be fair. You've used some really good points this morning, actually. You've just said inflation underrated there, which I think was a great phrase to hear. And the best one so far, complexify as well. I'm going to steal that from you, if you don't
Go
mind.
ahead.
Look, what kinds of things are the really canny investors, the real smart investors doing differently with their money in today's economy?
I think there's been a very, very noticeable shift from the traditional forms of, and I won't call it investment, I'll call it saving, right? Very, very, and we've noticed this. And again, I will accredit technology for this. I will actually accredit information and media and all of that stuff because investors are now that much more aware of different choices that they have. And I wouldn't even call them investors, really. I would say, it's someone that's probably wanting to set up an investment portfolio, someone that's just stepping into into that stage of their life where they're saying, I'd rather, how can I save this money more effectively than just put it in a fixed deposit interest rate account? And there are so many more diversified options available to them. But what I have noticed is a lot of people, specifically, the younger working population, now coming up to you and talking to you about, but should we be holding some stuff in AI energy, or should we be holding some stuff in industries that you probably wouldn't have heard about before? Which a great one that came to me the other day by a client is, what do you think about the nuclear recycling sector? And I thought, wow, you wouldn't have heard stuff like this 5 or 10 years ago. So it is, investors are becoming much more savvy to a lot of the other options available to them. It's no longer just brick, mortar, and deposits.
It must push you as well. When somebody says to you, when a client demands you, what do you think about nuclear recycling? You must be thinking, oh, okay, scramble, get some information. But it must be a real bonus for you. A learning bonus.
I tell you, it's absolutely, it's so gratifying and humbling, the experience. And I say this, pre-COVID and post-COVID was such a different world for anybody in the investment landscape. And post-COVID we have literally unlearned a lot of the fundamentals to relearn new fundamentals that fit in this new world of investing. I tell you, the funniest one, it's probably a bit of humor for your guests listening, is when my 8-year-old nephew comes up to me and says, Pokemon cards are the new way to go. And I'm thinking, gosh, that's another form of investment now.
The thing is, he's probably right.
He is.
There'll be, if you keep those cards in good order and look after them in a few years.
What I mean.
Like baseball cards, aren't
Well,
they?
there we go.
Yeah, okay. So your 8-year-old nephew, good investment. Can we get him in next week? Look, I wanted to ask you about risk, because risk is that thing. You hear this phrase all the time in investing, personal investing in particular, the risk versus reward. I'm going to say conundrum, actually, because it's an eternal issue, isn't it? When we talk about risk, what does that really mean? How does that manifest itself when somebody's managing, their career or their business?
I honestly think, and not to sound like a cop-out for this answer, but I think risk is so subjective for where you are. What financial stage of your life are you at, right? Are you at that point where you've done all the hard work and now you just want to protect this fortress? At that point, your level of exposure cannot be the same as someone that's 28 years old, ready to enter the market. They've got about 30 years ahead of them for work. And sure, growth is a little bit more on their side. Ergo, risk is a little bit on their side.
Sure.
So I think it's so subjective. And this is kind of where I always sit with clients and I say, you need to have an advisor that listens to you, that has heard your objectives, heard where you are, heard what you want to achieve, and heard how palatable can we make it for you to get to that point. But I would definitely say, kind of being a little bit generic about this, is whilst in this geopolitical climate, I would be definitely implementing, risk diversifying measures in a portfolio. So get your staples in, get your standards in, make sure you've got that diversified broad range investment, that you're not just chasing one particular sector, but you've got a good premise there. But on the other end, I would also say that no, there is opportunity for growth, because what a phenomenal time to be alive, where we've just scratched the surface of AI. We haven't yet seen the full integration, into utilities, banking, healthcare, which is such a huge, it's an untapped area. So I would argue that you're kind of sitting at this beautiful point where, yes, it does look a bit scary out there, but at the same time, there is a lot of growth opportunity too.
But don't be too frightened. The thing is, life is a risk, isn't it? Every day you cross a road, you take a risk.
Absolutely.
So I guess that's the way to look at it, really. AI excites you, doesn't it?
I think it's very, very interesting to look at it from very different channels. And I think what excites me more is understanding where, as a world and as a market, we're moving in today. You're not just you're no longer sitting at a point where you're just talking about a bunch of companies coming up. You actually have governments and sovereigns that are co-investors now. So that, to me, kind of says that this isn't a phase. You're not looking at something that will kind of fizzle and blow over. You're looking at something that you're going to require infrastructure. You're going to require energy. You're going to require that intellectual manpower to go behind it. So I think it's the internet, but just on steroids.
Okay. I think you might be right, actually. But the thing is, it's here now, and it's already part of our lives. For anybody in education, I've got 2 kids, both at university. 2 young adults, I suppose I should say. And both AI is just a part of, it's just where it is.
Yeah.
There's nothing novel about it particularly.
No, not to them. And this is what I find fascinating, right, Tim, is, again, you kind of sit with the younger guys and you think, gosh, think about this, is jobs that are going to exist 20 years from now haven't even been created yet. And that's kind of where, to me, that's what excites me about AI, is the opportunities that it could potentially unfold. I don't even think we're there yet. And specifically, not just AI, but robotics, the unmanned services side of things. It could be pretty monumental.
All right, then. So let me ask you something about financial mistakes, common financial mistakes that you see people make. And the backdrop to this whole conversation is the headlines, the unpredictability. Perhaps that's not something new. Perhaps that's just how, 'twas ever that way, I suppose. But what are the common sort of financial mistakes you see people making or have seen recently?
2, panicking and not doing something about entering the market.
So nothing new, really, at all.
Nothing new.
Yeah.
It's the same old, age-old, same story, just a different era. But whenever something, we had COVID, and then we had, the inflation rises and the interest rate rises of 2022 and the great big market sell-off. But had you done nothing, had you just done nothing about any of that, you would have still been sitting in a very, very pretty position right now. And that's always my point, is when you are investing, don't chase hype and don't chase headlines. Build your investments based on the traditional fundamentals. Buy good quality businesses. And when you buy good quality businesses, the idea behind them is you have done the due diligence to understand, are they capable to weather the storm? If they are, then don't do anything about it. Don't panic. But I think the greater risk for me today is somebody that's sitting on the sidelines and looking at this and saying, oh, I'm not going to enter. It's a bit too inflated. It's a bit too high.
Sure.
I won't do it. That's a greater risk.
There's no time like the present, is there?
No.
Yeah, okay. Don't believe the hype was good advice in the 80s. It's as good advice now as it was then. We have about 30 seconds. If you haven't reviewed your financial strategy recently, and I think this is really important to look at what you're doing, to keep on top of what you're doing, apart from now, when should you start reviewing it?
I would argue that that is a job that you should assign a professional to do. And if it's a professional doing it, then I can assure you it is every day. And it should be done every day. Because you're looking at things, when you're reviewing things, doesn't necessarily mean you're taking actions against it or, you're changing things around, but you've got a good eye on it. You know what's happening in the market. You know what's happening. If something requires a change, it shouldn't be done in the rearview mirror. It should be done proactively. So find a good professional that you trust, that you know that when you sleep, they're working hard enough to make sure you sleep peacefully.
I like it. Payal Trehan is a partner, a senior investment strategist with the Michelle Carby practice. I've enjoyed talking to you. Thank you.
Thank you so much, Tim.
Appreciate you coming in. Mira Business FM, this is The Morning Drive. Get in touch with us. Let us know what you think on social media. Don't forget, wherever you get your podcasts from, just look for Mira Business FM for more.